Good. Good morning, everyone. Welcome to the Real Estate Property Tax Relief Task Force meeting. This is our second meeting of the interim that we are in right now. We thank everyone for joining in person and online. We will start with introductions of task force members and then proceed with our agenda, which if you're watching online is hopefully you found it on our website. My name is Nicole Grahowski. I represent Senate District 7, which is 22 communities in Hancock and Knox counties. And I'll turn over to my co-chair.
Good morning. My name is Ann Matlack. I live in St. George and I represent House District 43, which includes the communities of Cushing, Thomaston, South Thomaston, St. George, and part of Owl's Head.
Representative Nutting.
Good morning. I'm Representative Bob Nutting. I live in Oakland. I represent House District number 66.
Hi, I'm Matt Peters. I'm a representative for the real estate professionals.
Good morning. My name is Mike Allen. I'm the Associate Commissioner for Tax Policy in the Department of Administrative and Financial Services.
Good morning. I'm Kathleen Billings, Town Manager for the town of Stonington, and I'm representing communities under 4,000 on this task force.
Good morning. I'm Vinnie Caliendo, retired CEO of Native Maine, representing the business sector. Thank you.
I'm Dick Woodbury. I live in Yarmouth and I'm representing economists.
Good morning, Bruce Bickford. I represent Senate District 20, which is Auburn, Poland, New Gloucester, and Durham.
Thank you all. I'll turn it over to you, Ms. Lear.
Yes, Carolyn Lear. I'm the city manager in Bangor representing larger municipalities.
Thank you. Mr. Saucer, go right ahead.
My name is Phil Saucier. I'm a municipal attorney at Bernstein Shore, and I'm on the task force in the spot for an attorney with constitutional background. Thank you.
Thank you so much. Mr. Hoskins, since you're on, why not introduce yourself in case people are wondering?
Who's this guy hanging out over everyone's shoulder? This is Steve Hoskins from the Progress and Poverty Institute. I'm on the road today, so in a slightly flexible working situation, but should be available for questions later on.
Thank you so much. We also have with us our analysts from the Office of Policy and Legal Analysis, Jesse Griswold, Lindsay Laxon, and Rachel Olson. Thank you all for being here and triangulating us spatially and metaphorically. We do have some other members who are absent at this time that we anticipate will join us as the day goes on, and we will have those folks introduce themselves as they join. So we do have a lot of work to do today, kind of depending on how much conversation we end up having, but we are going to start with additional information sharing. So the first agenda item is follow-up information from the Maine Municipal Association. We had a number of questions that we asked during the last interim, and MMA has worked with their Legislative Policy Committee to answer some of those questions. And so we invite Amanda Campbell, the legislative advocate, to join the task force and share information. And just to orient members, there are some materials from MMA in our packet with the blue agenda, and they are the first page and onward from there. Thank you, Amanda, for being here. Welcome.
Good morning. Nice to be back. I'm sorry I missed your very first meeting of the next interim, but I will not apologize for having been in Key West. So I promise that I toasted you all. My name is Amanda Campbell. I'm one of the legislative advocates at Maine Municipal Association. I am our resident tax nerd. Happy to be here. If you recall, back in one of the very first meetings of the task force, you folks asked some questions of us. The data related questions we were able to bring answers back to relatively quickly, but the more policy related questions we wanted to defer to our LPC. And so you'll see those 5 questions listed on the backside of your blue cover sheet. And then the following pages are essentially the answers that we collated or collected from. Actually, it was we have our own tax reform working group that is made up of LPC members, but it is not the full LPC. This has been blessed by them. I'm not going to read through all of it because a lot of it are items that this task force has already addressed, which is really cool. But there are a handful of things that I would like to bring to your attention just for further discussion or just to keep in the back of your mind as you're going forward with your conversations. And so for the first question, to what extent do municipal officials believe current property tax exemption programs, including the homestead, are effective? And should there be potential changes? As you'll all recall, the supplemental budget included a pretty substantial change to the homestead program by combining the homestead, the veterans, and the blind exemption all into one, essentially one program that piggybacks on itself. And I will defer to Dr. Allen if I'm wrong, but I do believe that the 12-month waiting period now will also apply to veterans and blind people. And if that's the case, that may be something that the task force wants to suggest that the tax committee revisit. I know the tax committee looked at removing the 12-month waiting period in general during this last session, and that did not make it across the line, which is great, but now this is sort of potentially an unintended consequence of that change in the homestead exemption program. They, of course, had comments about Betty and Better. Some of that has been addressed. You hear me talk all the time about the shift of the tax burden from exemptions, current use programs, all of those things, and that the benefit that an exemption or current use member receives is simply, the burden of that is simply shifted to all of the other taxpayers. This is sort of our mantra at MMA. Are there state programs that are difficult to implement? Tree growth was the #1 that they talked about, and I'm happy to have been part of the discussion in making that happen through the bill, the LD 2244 that came out of the task force at the end of the session. And so I'm looking forward to that ongoing investigation into that, and hopefully maybe going forward the other current use and exemption programs. One of the big things that they talk about, and is not something that you all can fix, but general assistance is a huge burden for a lot of our municipalities. And if the state could just give us the statewide database that they have promised us for a long time, it would really cut down on a lot of the burden. I know that that's something that is not necessarily a taxation program, but it is an issue. I wanted to just point out that this last session, we saw a lot of policy area crossover between taxation and the other policy areas that are being addressed here at the State House. Specifically the mandated ordinance and zoning changes. Those cost a lot of money. There are one-size-fits-all things that don't necessarily fit all, and they cost us all money. And so even though those are coming out of a committee that is not necessarily taxation, it is something that is increasing the municipal budget. Under your motor vehicle registrations and those things that we do for other, at the municipal level for other state agencies, during this last session specifically, we saw an incredible reduction in excise tax coming to municipalities through the changes the tax committee made for camper excise. And inadvertently, there was a change in transportation to the veterans excise tax exemption, which had been limited to 3, but including the leases now, unfortunately, the way it was worded now makes it 6. So we fixed it and then we unfixed it. So just things that are happening, that it's adding leased vehicles into it, absolutely appropriate. But the way it was done, unintended consequence now made it 6 vehicles when we really wanted to keep it down to the 3. You all have heard already how much revaluations cost us. They're expensive. Let's see. The question that you all asked us about state level support to make investments, the LPC viewed that through an economic development lens. And essentially what they said was, we as municipalities take it upon ourselves to create economic development within our communities, but it's the state that's seeing the benefit from that, not necessarily the municipality. So that's their answer there. How can the state take, what actions can the state take to help reduce municipal cost? We've talked about a lot of these things already. I would like to just restate that costs are increasing and that increased costs of doing business do not equal out of control municipal spending. And then the last question about core values, these were all things that the working group agreed, that home rule reimbursements, all of those things are important to us. Home rule is really important to us. And that legislation can't be drafted with the expectation that a policy will work across the board. And so those are things that we try to hammer home across policy area. And that really our message is that the intergovernmental partnership is vital to the successful provision of services, whether they're state services being implemented at the local level or just local services that are being supported by the state. And that recognizing that the state and municipalities have a role to play in that partnership is really of utmost importance. So those are our answers. I did bring along one little other piece of information that is not included that I'd forgotten about. And when I was going back through all of my documents from our working group, I had actually sent out a survey to our, I think it's maybe 11 or 12 members in our tax reform working group. And I asked them, this is back even before you all started meeting, to sort of go through the requirements of the LD 1770 bill of what all of you are supposed to do and to rank them. What are your most important, what are the things that are most important to you that the task force is supposed to be doing? And I had forgotten we had done this, and I just wanted to share briefly the handful of things that our municipal officials thought were most important to them. To develop targeted support for long-term property owners who are aging in place. The impact of unfunded mandates. Exploring property tax relief measures and programs used by other states and how they may be adapted to ours. Researching which states have successfully amended their constitutions to allow for more property tax relief and the advantages and disadvantages of that. Investigating how other states ensure equitable, updated, and fair valuation practice. And finally, studying states that have implemented property tax relief programs specifically for long-term homeowners. So I know those are all things that are on lists that are in your packets either now or prior, but I wanted to share that those were some other municipal perspectives that I had forgotten that I'd gotten and wanted to make sure you all heard. So.
Thank you. We have a request from Senator Bickford. If you could email that hierarchy that you just read out to our
Sure.
analysts and they
Yeah,
can
absolutely.
circulate that around.
Absolutely. I literally found it yesterday afternoon. I'm like, oh, this is sort of fun.
Well, it is interesting because there's all those tasks in the law that we have to. look
Right, and
at,
that's
but
how I
to
broke it down
hear-
in the request for, you know,
Right.
sort of tally the ones that, this is what they're supposed to do. So tell me what ones did you think? And so.
What to put emphasis on. Senator Bickford.
Thank you, Madam Chair, and good morning.
Good morning.
We missed you at the last
Yeah, that's
meeting.
very kind.
I just want to circle back. You talked about economic development and that the state benefits more from the efforts municipalities put forth encouraging development than the communities. I think I got to push back a little bit on that because communities want economic development. It increases their tax base. They can create TIFs, which in turn help them with aid to education. So I don't know how economic development helps the state more than the community. Can you go back and explain that?
I think the distinction is between the increased sales tax that the state benefits from whatever that business creates, and increased income tax from new folks moving in to take jobs with those employers. You know, we do see some of that through revenue sharing, but of course the state is getting the brunt of that benefit. And yes, we are getting our share that's allowed, but we're not quite as much as the state is.
And most businesses, you're gonna create a huge property tax draw from those businesses. That's why I'm asking it.
Yes, potentially that's true.
Mr. Peters?
Thanks so much for putting this together, and I agree the priority list is helpful because I think it's good to reflect on
Sure.
what we have done and what we can continue to work on. My question actually is in the same one. similar to Senator Bickford's is I was unclear as to why you only mentioned the economic development investments. So there's a lot of other investments that municipalities can make. And it'd be helpful to hear how the state can support reducing property taxpayers' burdens. Are there other investments like you were saying that there isn't enough financial technical assistance and for certain areas, or are there and you mentioned a database or something. So those are investments that the state can make that will help
Sure.
reduce burdens at the municipal level. Similarly, are there infrastructure investments that can be leveraged so that it reduces the operating costs of the municipality? Or so I would push back and say that there's a lot more there that we could kind of drill into outside of just economic development.
Sure. And my response to that would only be that the prior question ended up being like 3 pages long with bullet points. And so to prevent from doing that in the following question with the same items, as we were going through those discussions, they said, let's try and pinpoint this answer instead of making it as broad as the one before. I can certainly go back and get some broader response.
Ms. Billings?
One thing to reflect on this is, it matters where the community is. I know for a lot of coastal communities and stuff like that, it's really rough to have economic development because the further away from the interstate, the further away from airports, the further away from everything, it just makes it really hard. And also too, housing in the coastal areas is 3 times more expensive than other places. And when we question our businesses, what can we do more to support you? It is do something about the housing because, and we know all of this, but that really is a barrier to us to be able to do anything more meaningful than seasonal employment, which, you're starving the rest of the year, in my opinion. Thank you.
Representative Nutting.
Thank you, Madam Chair. Just a quick word on the mandated motor vehicle registration thing. And I am the villain here in the 130. In the 131st, I attempted to fix what we thought was an error, and the Transportation Committee did a fix, and it didn't fix it, made it arguably worse. In the 132nd, I introduced another bill through the chair of the committee, and in an attempt to fix what I had unfixed on the 31st. And as a result, the way it was worded in statute screwed it up again. So I'm hoping I'm not going to be here to fix it, which may be a good thing. But somebody needs to put in a bill to fix it. And I assume someone will.
I promise you it's on my list.
Well, I guess I'm glad to hear we don't need to learn more about that really specific issue because it's under control, even if it's currently out of control. Are there additional questions for Ms. Campbell? I did want to acknowledge, I got a note that Ms. Mutezi has joined us, but her camera isn't working, so she's gonna have her video off, but I think it will still work. If you have any questions, to just raise the virtual hand, and then I think it'll show me that you're out there, Ms. Mutezi. And if you want to say hello, you can feel free to unmute and do so.
Hello.
Hi. Glad to have. Sorry about the technical difficulties, but we're glad you're here.
Okay.
Okay. Certainly a lot to digest here. Potentially questions could come up as we continue our work for the day, but seeing no further questions for Ms. Campbell at this time, we'll relieve you of the hot seat. I'm always amazed you can hear over there. Okay, we are a little ahead of schedule. Next on the agenda, we had listed Mr. Hoskins, who is back. Great, you're back. To see if members had follow-up questions based on the report. Hopefully folks saw the final draft of the report. we received recently with some information from our analysts about what some of the changes were. But Mr. Hoskins, I'm going to put you on the spot and see if there were any changes to that report that you would want to highlight for us to sort of kick it off, or any feedback to share at this time before we see what questions we have.
Yes, thank you, Madam Chair. So yeah, we have published the final version of our kind of mid-task force report, which is now available on the task force website. The main changes compared to last time are, in particular, we combined all of the time trends information into one isolated section that kind of starts the report off and provides a bit of context about just what's been happening with property taxes over the past decade or so. That is to kind of put together the narrative that we provided at the last task force meeting, essentially showing that, municipal spending has been increasing, but largely alongside inflation, and that tax burdens as measured, both in terms of, inflation adjusted tax bills and taxes as a share of income and effective tax rates are all relatively stable over time. Other kind of more modest changes, we added a section all on its own for residential vacancy rates by county and type of municipality. And those are kind of as you'd expect, particularly elevated on coastal regions. We have refined some of our measures of property taxes as a share of income. In particular, what we did there was just to make sure that we are making sure we're combining the effective year of the American Community Survey data with the tax rates that were applied and the property values that were applied in that year. So because of those 5-year smoothings, 2022 is the kind of latest available year for that measure. We added an analysis of, you remember the discussion we had about property taxes as a share of, or property tax burdens by homeowner tenure, and we're sort of arguing that, the data suggests that yes, property taxes are slightly higher for longer term homeowners, but that's largely a function of where they live, rather than, within an individual municipality. It tends to not be the case that longer term homeowners are paying more. We added it to the measure of property taxes as a share of income, which also showed no trend actually on either side of that measure. And then, we talked about the Cumberland County Regional Assessing Program, which I can't remember who it was, but was helpfully suggested by a task force member last time as a kind of nice example of soft regionalization of the assessment function on a voluntary basis. And then we have now compared, we looked at assessed values for residential versus non-residential property for municipalities that have assessed within the last 10 years, essentially to look at whether assessments are shifting the tax burden towards residential property for the municipalities that do revalue on a more frequent basis. And again, the data doesn't really suggest that is happening to a meaningful extent. So that's all in the new report, and we'll be happy to take questions this morning. And I think in particular at this point, we're thinking about, what the task force is interested in for subsequent bits of analysis. But of course, I can talk to the existing report as well.
Thank you very much. Are there any questions from task force members?
I do see Ms. Matessi's hand up.
Oh, okay. I can't see it. So.
She's taken it down.
Okay.
So I think that was from earlier.
No problem.
Okay.
No problem. Mr. Caliendo.
Thank you very much for the updates. So what I will, and it may sufficient, it answers the questions that were laid out. What has gotten my curiosity is it may be sufficient to answer some broad-based issues that the task force is set against. But I did some digging after I started to say, I had no idea, this is the ignorance of my purview. I had no idea that municipalities were doing audited financial reports. I just had stumbled upon them. I said, so follow the money. So I'll leave it at this, but some of the things that I started to dig into that was publicly posted that I could find, even though municipality may have it, it may not be posted. So you can request it. Is how do you explain these things to the constituents that, you represent, or to the town managers that are here, how do they explain that? Because I saw such variation in a handful of towns. What is what we're going to do mean to them? And realize that may be out of scope. So I will yield to the direction of the mission here. But that's what hit me like a ton of bricks. Appreciate the really good work here. But if you're in Wyndham or in Holton or in Alfred or in Portland, whatever comes out of this is going to have very different results. And I still, to this point, don't know how to explain it. If I was to explain what's happening with my neighbor and their property tax bill, I don't know how to do it. So I'm gonna leave it there for consideration to say, is there the ability, because I am manually cobbling. I've spent 20 or 30 hours just reading reports and cobbling data together and have some very, very interesting results on just a couple of municipalities. And wouldn't it be fun to roll up the actual financial reports that are all reported on the same standard? And I'll leave it there.
Thank
So I
you.
can't ask another question for you, Mr. So thank you for your work, but it doesn't answer the question of how do you respond to your constituents and your municipalities about whatever we do? How do you answer their questions?
I appreciate that. And I think I've been thinking about that a lot because the data that we are able to look at is, generalized across the state. And so really specific municipalities can be experiencing different effects. And I think we are in this tension where the state absolutely has a role to play to help, but there are also municipal decisions being made by their local elected officials. And maybe if I lived in that town, I would know, oh my God, this huge culvert blew out in this area and we had to do an emergency repair. And so this year our taxes spiked, or we had a family move in that had a lot of needs in the school system, or I can think of different examples in my region. And so I think that while we could spend a lot of time trying to figure out what's going on in every town, I think maybe we need to think about when those things happen in those towns, how can we help the taxpayers sort of smooth out what their experience is and afford to continue to pay their taxes, because there's just so many variables and unknowns. It's my take on it. Senator Bickford.
Thank you, Madam Chair. Yeah, and in response to that a little bit, I think my understanding is municipalities, when they do their budgets, they have to leave, I think it's around 10% is like a buffer, not necessarily a buffer. I don't know what the word is. Somebody in that field can explain it better, but that money left over, yeah, contingency fund, so that if culvert does blow out while the next property tax year, they've already got some money set for that if they don't find a pet project they want to blow it on, which happens quite often. But
I thought you were referring to the overlay, but you're
Yes.
actually, yeah, okay,
well, contingency overlay, I don't know what it's called.
right, yeah.
Mr. Leishman, welcome, and please go ahead and introduce
Thank you.
yourself. And if you have a question or comment, then proceed.
No, I don't. I
Okay.
apologize for being late.
No problem at
Just
all.
wanted to help my friend out.
Thank you.
You're welcome.
Feel free to introduce yourself properly, though, if you'd like.
I'm Kerry Leishman. I'm the assessor for towns of Camden and Rockport.
Thank you so much. Mr. Caliendo.
So selfishly, to answer my own curiosity, I might take all the municipalities represented by the four of you, by Ms. Billings and Ms. Lear, and just see what I can read and put together. Because just Wyndham and Alfred and I understand there was some really different things, as you said, but I would just say, do you understand what's happening here? Because when they have a capital improvement, there's also a very different thing. If they fund it from general revenue streams, it flows through the numbers very differently. If they raise a bond or any kind of debt instrument, it comes through the reports very differently. But every household manages a checkbook. Some better than others. They know if they can get pizza tonight or not, right? But to get to explain these things to your own citizens, and I know this is probably out of scope, but I'm just gonna put some time in there to understand what is going on. So if you want, can explain it to say, for Wyndham, I saw the state revenue sharing was increasing 3 times as fast as their own property taxes. And then the reporting summary changed with the auditors. So how do you get access to that same right? So you might have the magic formula with Dr. Allen and Mr. Lacy figured out how your revenue sharing, but that was through 2022. And then they changed auditors and the reporting summary changed. So what happened? If the revenue sharing, what's that for? And I'll just parking lot that.
Well, I would just say as a legislator with 22 towns, I don't always know what's going on, but I appreciate that when I reach out to the municipal leaders, if I hear from a constituent, you know, I can get an answer that usually I understand and can sort of justify and help the constituent know, because there is that question we always have at the state level of what is our responsibility for some really specific decisions, and I really want to trust the local elected officials and their staff to know better than I know on some of those cases. But I want to also make sure, just to be clear, that extreme variations and sharp increases that we're hearing concerns about, that the state can think about that and help with that. Representative Nutting?
Thank you. I'm not sure that I have any particular answer to your question, but I'm on the town council of a community, Oakland, which has approximately 6,000 people. Major changes to something goes wrong at the school system affects differently, I think. Most schools are operated as RSUs or SADs or something. If a large employer goes down, like a mill closes or something, then obviously impacts, people understand that. Oakland has an audited fiscal done by a certified auditor, Bangor, annually. And that he comes and explains it to us, or this year did it via Zoom, explained it to the council, and we have a budget and advisory committee. So we looked at that and we listened to his, what we're mainly interested in is if he sees a red flag that's a problem. The other 20 pages of numbers are fine if you want to research it. As far as the constituent or the citizen is concerned, unless something happens to them particularly, or they're concerned about increasing the size of the police force or a new fire truck or something, they really have little interest in anything other than what do I owe? So I don't know if that's helpful, but that's the way it works in my town.
Yeah, all done.
Thank you. Mr. Hoskins.
Yeah, I just wanted to speak to Mr. Caliendo's question. Yeah, I distinctly remember the moment when we were preparing to apply for this position, where, you know, I was thinking, oh, it's 16 counties, you know, how hard can it be? And then the moment when I saw, there's 480 municipalities, pretty hard is the answer. So the way we have sort of thought about this is, you know, the report covers some statewide figures, some county-wide figures, and then sort of we classified municipalities, and I think these give, you know, pretty useful summary stats. In terms of going into the level of individual municipalities, well, I will point you to the dashboard as somewhat of a useful tool. I think it's mostly useful at the moment for looking at how things are in the most recent year for each of the measures we have. But I will say, you know, we haven't built out the time trends chart in that dashboard to do more than just property values at the moment. So if Mr. Caliendo or the task force in general have some of the measures from our report that they think would be especially useful for municipalities to compare over time at the municipal level, we can probably add some of those. You know, any that come out of the MVR are very easy to add. Some of the other ones may be a little limited in terms of time trends. But yeah, if there are some of those MVR variables, we can add them to a time trend chart for you on the dashboard so individual municipalities can be looked at.
Mr.
Yeah,
Caliendo?
my last question about, especially, thank you, Representative Nutting, for your explanation, is I'm also not clear yet, as I'm trying to catch up to most of you. what of these decisions belong to the municipality and where does the state feel its obligation to supplement, and the economic impact being the driver of everything, right? So and that's also not part of the scope, right? But when that happens and there's either an economic closure of a major employer in the municipality or there's a startup, what does that do to the state's responsibility to separate where the property, it's unclear to me. So I'll leave you there as a resident. It's unclear to me.
Mr. Woodbury.
Thank you, Madam Chair. I was struck with the findings in your report, Mr. Huskins, about just the general, when you're just looking from 30,000 feet, the averages across the whole state, that the burden doesn't seem to have noticeably increased in your data. The tax rate doesn't noticeably increase in your data. The valuation maybe increases a little. The main property has gotten more expensive. But the reason we're here is we sort of the legislature got a sense, and all of us got a sense that we actually have a problem that we're trying to address here, and yet the aggregates don't show it in some acute way. We don't see the burden measures that you're doing going up, or the rates going up, and so I think my answer of that is a distributional one. That is, yeah, on average it hasn't gotten worse, but for some people it's gotten pretty darn bad, and for others it's manageable. It's normal inflation or whatever you want to call it. But I just wonder if you have any other kind of insights on, I don't know, I guess distribution, or sort of how to reconcile those two things. That on the one hand we think we've got a big problem we're trying to fix here, and on the other hand, in this aggregate sense, it doesn't seem like the trends are that awful.
Yeah, I would more or less agree with all of that sentiment. I think our impression was that the overall trends are not showing a substantially rising burden, and would also agree with your comment that the more important question is the distributional effects. I would perhaps add a slight caveat that I think that constituents often feel that the burden of taxes is increasing unduly and unfairly, and sometimes that's just coming from a desire to not wanting to pay taxes. So I would caveat that somewhat, but yes, certainly there are distributional effects, and that was kind of why I think we wanted to focus on who is being burdened, and there is the main problem with property tax burdens are, it's a great tax, but it does impose a high burden on low-income homeowners in particular, and especially in cases where their property value has risen a lot. So our takeaway, I think, from some of the analysis of the existing relief programs and what changes to them would do is that the property tax fairness credit does a really good job of resolving that. And then perhaps the homestead exemption, works reasonably well as well for the owner occupier. And so, yeah, perhaps, if the task force were trying to really focus in on this question, that would be where we would suggest focusing attention where are the corners that we have missed in this process for the burdened individuals. And then perhaps, I'll struggle to recall this from our report on the spot, but there were some signals about types of municipality that are particularly burdened, so type of community. And offhand, and this is sort of, recalling, I believe it was in particular the kind of farm and forestry communities, more rural areas where, a thinner tax base, lower property values to collect revenue from, but still having to provide, a base level of services. I think that there were indications that those were places where the burden was particularly sharp. But, we'll have to check back on our own report to make sure we're talking correctly about that.
Mr. Leishman and then Mr. Peters.
Thank you, Madam Chair. So I echo Mr. Woodbury's observation in that my fear is that people will read this report and come away thinking, well, it's not really much of a problem. And there is, I mean, I talk with taxpayers every day and, you know, years ago, the conversations from years ago are different from the conversations now. People are really stretched. They're running out of discretionary income if they have any at all. The way that house property values are rising and then are reflected in the taxes they're getting are truly big leaps. Yeah, I spoke to somebody yesterday whose taxes went up from last year to this 70%. So the problem's real, and for whatever reason, I don't think the report is capturing it. One of the things I mentioned last week, and I harped on a lot, was the mean versus the median thing, and I think that does skew a lot of the conclusions and information as you're presenting them to more. So it's not properly reflecting what's going on out there. You know, one of the reasons that the median is so important is because it's the middle. It's not affected at all by outliers. And I illustrated in Camden last meeting that the difference between the median property value of residential property value is $200,000 less than the mean number. So I think that's part of the problem, but I don't, not being a mathematician, I don't know how well that would spread throughout the report. But the report is definitely not capturing the desperation that a lot of people are feeling, that they can't afford their homes anymore, yet they also can't afford to move. So I just wanted to just kind of agree and emphasize those points. Let me just check one thing. No, that was everything. Thank you.
I'll just, I did forget to mention in my updates on the report, we did, to your comment about means and medians, we did attempt to go through the report and look at places where there was a shift between those two types of measure and it wasn't explained. And we've made a couple of additional, edits in there to kind of try and explain why we're moving between the two. Typically, the answer is yes, we will try and focus on medians where the data are available for it. And, we're talking about a measure where there is a long tail that can, skew the mean. For example, very high, so a few very high home values can drastically drag upwards the mean and doesn't really reflect the median homeowner's experience. So we use medians in those cases. So that should be explained in the report. But yes, certainly, I think your point about, these kind of aggregate measures can paper over what's happening at the individual level is certainly something that's true. Yeah, I think it would be terrific to, spend some time with the task force now, finding what some of those cases might be and how to identify those people and consider whether they are addressed by existing relief measures. So in some of these cases, they should be, if aggregate incomes are increasing, but your own household income is not, then your tax burden will be increasing as a share of income. And the hope is that those people would, be eventually find their way into, relief programs like the tax credit, the property fairness tax credit, and so on. So yeah, let's talk about those individual scenarios.
Mr. Peters?
It's funny, and just right before you mentioned looking at individuals, it has had the same thought of, I think, looking kind of at those anecdotal questions of what is this person's issue, and are there, because they're probably not the only one, are there specific solutions that will meet their issue, or is it on average actually not as bad, and people are having perceptions that that taxes are high and the taxes just are? I don't know what the answer to those specific individual issues are. What I can't remember about the report is if we were able to look at different quartile tax burdens. I just can't remember, and because we were talking about median, and Mr. Woodbury mentioned the median, though, 20% quartile, or 20% people are they paying a much higher percentage of their income and at that point, does that information then help us inform our proposals? Is $500 going to make a difference, or is the actual number 2,500 and that'll make it enough difference? I just want to know what we're proposing is going to be effective. Yeah, thank you.
Minor comment on that. So, you know, we at this point in time, you know, only have the data to look at, you know, individual household level information on property value, tax bill, and for some municipalities, you know, we can account for whether or not those properties are receiving the homestead exemption. The real magic will be in combining that with their demographic information about what their income and their you know, and their wealth is on other measures. And so slight progress on that. I spent some time after the last meeting with Dr. Allen and Mr. Woodbury and some of the property tax or the tax team from MRS, and you know, working on whether our data sets can be unified to use income tax data alongside property tax information to do some of this, you know, really granular level individual household modeling. We'll probably need to hear from the two gentlemen I mentioned to, you know, on progress with that. There will be limits to what we, PPI, can do because of confidentiality around that data. But yeah, that is certainly something that we're trying to pull off with a combination of the ATOM data that we've acquired and some of the income tax data that MRS have.
I don't know, Dr. Allen, if you want to comment on that. We did have some other questions as well, or we can circle back to it later. It's up to you.
I just didn't know if you wanted Representative Nutting to ask his question first.
Senator Bickford was actually next in the queue.
Oh.
And then Representative Nutting.
Thank you, Madam Chair.
Yeah, I am keeping track. Senator raised his hand first, is why
That's
he's
right,
above you in the
'cause
pecking order.
I graduated from the House. So Mr. Leachman brought up a point about someone with their property taxes increasing by 70%. That's an incredible amount, depending on where you live, because municipalities in Maine are so different. If you're in Aroostook County in Township 13, and you go from $1,000 to $1,700 a year in property taxes, well, you're devastated. But put yourself in Cape Elizabeth, paying $6,000 a year and go up by 70%, you're paying over $10,000 a year. So we have such extremes in this state with municipalities. We have my neighboring community, Lewiston, who hadn't done a reval in over 30 years, all of a sudden is doing a revaluation, and people's properties values are increasing up to 3 times because they didn't do their job. I don't know what the answer is to it, but there's not a one-size-fits-all solution, I don't think. I did a back of the envelope calculation here. You take a married couple with 2 kids making $150,000 a year. They're spending $1,600 a month on childcare, $1,600 a low end on a mortgage, another $800 a month in property taxes, $600 if they have a vehicle they have to pay for, or 2. Figure $1,000 for groceries, $300 for gas, $350 for telephone and Wi-Fi and cable, and then another $350 in electricity. They have no disposable income. So when we look at what do we do for these people, well, it's not just people that make under $100,000 a year as a married couple. We have to look, you know, you would not believe some of the amounts that people live on week-to-week paychecks with incomes. I mean, some people can make $100,000 a year as a married couple and just live the life of Riley. And there are others that can't make ends meet. So it's just throwing that out.
Thank you, Senator Representative Nutting.
Thank you, Madam Chair. I think the senator has stolen most of what I was going to say, but as he's wont to do, but I think in general, nobody likes their taxes. They all understand that the taxes are going up every year because of schools, minimum wage increase, teacher salaries, et cetera, et cetera, et cetera. So everybody kind of understands that. It's harder on the person with a fixed income. There are some people out there who are living on Social Security, what, $1,500, less than $2,000 a month. I don't know how they do that, but it's harder on them. But then fast forward to the COVID and the influx of people from away and the increase in the property values coupled with revals. And the reason that we're here, I believe, is not the general grumbling. It's the fact that the combination of events from the last couple of years has impacted certain people that we need to help if we can, so that that widow who's 70 years old or more, living in a home where she has lived and been married and raised her children and just wants to sit in her own living room, can afford to do that while she has no intention of selling her house and doesn't care that it's worth 300,000 instead of 100,000 because she doesn't intend to sell it. She plans to die there. And those are the people, if we can find a way to help them, that's why I think we're here. And Dick's comment that if you look at everything in a conglomerate, doesn't look that bad. But there's different people, and we can't save the world. We can't help everybody. We can't reduce everyone's taxes using state money or not, or some other creative program. But if we can find a way to help those people who would just like to live in their home, I believe that's why we're here.
Mr. Saucier and then Representative Matlack.
Yeah, thank you. And unfortunately, I have to leave early this morning to let the analysts know. But I just want to make one comment before I leave, and sort of, I think, in the same vein of what I've heard. But, you know, I think generally what I'd like to see is more targeted relief. I think Mr. Woodbury's comments, whether that's the right solution or not, it was a little bit above my head, to be honest with you. But I appreciate where he's going with it, which is more targeted, and also Representative Nutting's comments. You know, when I think about targeted, I keep coming back to where I was in the first meeting, which is really, look, I come from a school board. I'm a very strong supporter of schools, but ultimately these are mostly school budgets, quite frankly. I mean, if you look at most of the share of most of our towns, it's one of the highest percentage. That funding from the state, that subsidy, is not targeted. It's targeted in a macro sense, but not on a homestead way. And to me, that's what I keep coming back to. I mean, I just did some quick calculations. Some towns are getting 9% of their budgets subsidized by the state, whereas others get 75% of their budgets subsidized by the state. But that's done in a macro way, right? Because in each of those towns, there are people who can't afford to pay anything, and some can afford to pay more. But it's a blunt instrument, and it's the biggest instrument we have. I mean, if you look at the numbers, the state spends about 1.3 to 1.4 billion in the state education subsidy. And it's, again, targeted only in a macro sense, 278 million or so on revenue sharing. But then when we're talking about the homestead exemption, that's only about 85 million. That's a very small number compared to the other two subsidy programs, if you think of them as that. So what I'd like to sort of see how, and I've always sort of been struck by this when I was school board chair myself, that, you know, we get our subsidy, I believe generally in the equitable principle, but the average home owner or taxpayer is affected very differently, but they're all treated the same because you live in that one town and you're given that one number. So I'd like to figure out a way to sort of target how the state is helping municipalities in a better way to help the actual individual home owner. Thanks.
Thank you. Representative Matlack?
I guess I'm still questioning or wrapping my head around who the targeted people are. I think that's what we're trying to figure out is who are those that are in need? The 70-year-old widow who's still in her house, a young couple just coming up, somebody with you know, a lot of income, but we need to be able to figure out who needs what. And I don't know that we're doing that right now. We're just sort of, we're just being broad brush about those folks that need our assistance. Municipalities need the assistance as it were, but how do you figure out who within your municipality needs your assistance? I'm sure that in some of my towns, they know, but there are other municipalities that are much larger where you don't know. So I'm trying to figure out who are the people that we really need to be helping that we aren't.
I want to dovetail on that before I call on you, Mr. Leishman, because I'm hearing like a lot of consensus that it's really important to find those specific people. And I hear it thrown around a lot, around 4% of your income toward your property taxes is considered relatively manageable, but I don't actually know where that comes from. And I don't know if any of the sort of experts, either you, Mr. Hoskins, or I'm looking at you, Dr. Allen, or Mr. Woodbury, or others, do we feel like, or do we have evidence that that is reasonable? I mean, I know coming from the Energy Committee also that there's a really specific number of your percent of income toward your energy costs that is considered high burden or not, and data backs that up. But I don't know if we can, should we be working toward 4% for everybody or some other number?
I unfortunately don't know where that rule of thumb has come from. A lot of times these things exist in the ether and we're never sure where they originated. I suspect in the case with Maine, it may well be that because the property tax fairness credit is essentially targeted to help those whose property taxes or what is it, a quarter of their rent exceeds 4% of their income, that sort of administrative threshold has also become the narrative threshold where the burden is too much. So that may well be where it is. I unfortunately don't know, what the kind of standard practice is for that particular measure elsewhere. I'm sort of more familiar with this idea for housing costs that 30% is the magic number, 30% of income. But yes, it may well originate with the PTFC is my thought.
Can you just clarify that 30% housing costs? What does that include?
For housing cost burdens, the federal measures, used by HUD for, various LIHTC programs and so on are, if your housing costs exceed 30% of your gross income, you are considered to be housing cost burdened, and if they exceed 50%, you are sort of severely cost burdened. And so for homeowners, property tax is part of that calculation. So, your mortgage costs, your housing maintenance costs, and then your property taxes, if those in sum exceed 30%, you would be considered cost burdened. And for renters, it's just the rent.
Does that include utilities? Okay. Sorry, I have many
Yes.
questions.
Yes, utilities are included in that measure, yes.
I didn't see anybody else wanting to comment on 4% necessarily.
Go ahead.
Mr. Woodbury?
The origins of it in our state. I mean, there was a program before the LD1 reforms that were 22 years ago, I think. So 22 years ago there was a committee like this, the LD1 committee.
Our number is not so classy.
Yeah.
Unfortunately.
And yeah, I mean, Mike and I worked on this quite a bit, and we sort of looked at the distribution, and Maine Revenue Services was able to do some estimates that roughly said a third of Mainers are paying less than 3% of their income, a third are between 3 and 6, and a third are paying more than 6% of their income. And 4% was kind of in this median range, roughly half more, roughly half less. And that kind of felt like it was an arbitrary choice in a way to how we structured the formula, but it seemed like a place we could create a formula that would be helpful. And I think this committee could decide that's too low or too high and sort of pick something else and calibrate it to how much money we want to spend on a program. But in terms of some magic reason for the 4%, I'd say it's more arbitrary than that.
Interesting. Mr. Leishman was next, or if we want to continue on this 4% thing, we could. I'd say you go for it. We'll see what you got.
Well, I'll be brief because a lot of what I was going to say was that I was going to express what Representative Matlack said about we need to figure out who we're looking at. I mean, and the range is probably what Representative Nutting was talking about, the 70-year-old widow, to Senator Bickford's example of a family that is paying their bills, but they don't have anything left over. And that's, just proves out that a one-size-fits-all solution is not gonna do it.
Right.
And I've been afraid that we're gonna forget about the family that Senator Bickford was talking about because, they're not in arrears, but they're making it get by. And the report, I don't think, addresses that family at all. So it's such a wide range. I'll be curious to see what we come up with because they're both in dire need, but they have different needs.
Dr. Allen and then Mr. Caliendo.
So I was just wondering, Steve, is some of this confusion with the data a timing issue? So for instance, on page 15 of the report, which is showing the median Maine homeowner's property tax burden, it does appear to be fairly flat over that time period. But the time period ends in 2022 because that requires the ACS data to determine the burden. But when you look at the other graphs, they go out to 2024. And that shows starting in 22, but really picking up in 23, 24. And I would assume if we added 25 in there, it would show the same thing. This all of a sudden, this spike in property taxes and the growth in property taxes and so forth. So I'm just wondering if sort of the burden or the reason for this task force and the concern among citizens is really coming from the fact that after 2022 or beginning in 2022 is when you start to see municipalities reval and sort of catch up to what happened during COVID. I still think part of this story is a shift to residential from commercial. Somebody's property tax going up by 70% tells me that they were getting a very good deal. Well, but that's part of the story, right? Like finally we're saying this is what your home is valued at. And so they must have been highly undervalued for a lot of years, which means they weren't paying their fair share, at least according to the formula. And I think that's what is happening a lot in a lot of these cases is that the revals are taking place. People's home values are catching up with the marketplace and there's a shift and people are shocked by seeing all of a sudden their property tax jump 25, 30, 40%. But it's sort of, they've been getting a tax cut for a lot of years. So I'm just wondering if you think that's part of the story here is just the data that graph on page 15 just hasn't picked up the last 2 or 3 years when this has really started to escalate.
Yeah, thanks for that comment. I did worry about that as well. So 2 points on that. 2022 was actually the big year for increases in municipal appropriations and school appropriations. So that year is actually captured in that chart. And, that was the big inflation year post-COVID as well. There was an additional increase in 23 and 4, but it was more moderated back, in those years. I think it was around 3.1% and 3.5%. So, but the big one, 7% or so was 22. And then the other point is that the state data on median household income did actually also increase quite a lot in the most recent update, which isn't captured in this. I might get my years tangled here, but I think it was the 2024 median income for the state, I think was up to 90,000 median household income, over around 75,000 the year before. So I think that when this chart can be updated to include more recent years, I don't expect that we're going to see this big spike suddenly appear. There's a reason why that basically that figure is available for the statewide data. It's not available for individual municipalities, which is kind of why we cap it at 22 in the measure that's in all of our code and therefore made it through into that chart. We could probably update that chart to give you just the statewide figure for the more recent 2 years. It just would be slightly uncomparable to the measure as it appears elsewhere. There's a slight caveat on that one. And then yes, on the 70% jump, my suspicion would be that is a revaluation municipality. Perhaps Mr. Leishman can speak to whether it was one of his constituents and whether it was a revaluation. But yeah, this kind of goes to that trade-off between having very frequent revaluations to kind of smooth property valuations over time versus the cost of doing so for smaller municipalities.
I have Dr. Allen, did you have a follow-up?
Yeah, just on the 4%. When I first started 29 years ago, it was 6%. And you got 50% of your property tax between 6 and 8% of your income, and then I guess it was 100% above 8% up to a certain, cap of how much you received. So, I mean, the circuit breaker program and the property tax fairness credit have gone through numerous iterations over the years. I mean, I think before the budget crisis of the early 90s, it was like late 80s, real early 90s. I think the maximum benefit you could get was $3,000.
How much?
$3,000. So, apply inflation to that, what's the best you can get now? $2,000 for people over the age of 65. So it was quite robust. LD1, I think, went back to that 3,000, or it was pretty high, right? But then we had the other financial crisis in 2008, 2009. So it's gone through many iterations. I think the 4% has just sort of worked off of that 6 as here's a way of continuing to try to help particularly lower income households with their property tax burden.
Thank you. There's a queue. It's Mr. Caliendo, Ms. Billings, Senator Bickford, and Mr. Woodbury.
Thank you.
And I have been looking at this side. I haven't seen any hands lately, just for the record.
I'll also be brief. So the quick rule of thumb, about 30% for housing. If you go to apply for a mortgage at any age, regardless of your down payment, they're generally going to qualify you with reasonable credit of about 30 to 35% of your annual gross income. Okay, so that's a very simple home only, mortgage payment only. And if your down payment's lower, they're gonna, right, it's a big amount, because I was taught 25% should be as a child. My parents did teach me these things. The other part is, what's the date? I don't see it announced anymore, but all taxes included, we're paying taxes through our paycheck through the end of April. So very simply, if you have Senator Bickford, remember everybody, I have 3 32-year-olds. So this is near and dear to me, helping. I'm seeing real time in different communities how my kids are trying to make ends meet, living in the state. They haven't left. So when you have 1/3 going to taxes and 1/3 going to your homestead, you can equate that to rent. You got 1/3 for everything else. So I will totally yield to the analysis of the property tax component, because I still want to know why my electric bill in the exact same house is doubled and I'm doing nothing different
Where do you heat pump?
Please, let's not talk about
No.
my
but-
energy policy life in this.
But
horseshoe.
that's the property, you've got
We can talk
1/3 of
later.
your bill, of your income left for everything else after all taxes and your residence. So that's all I wanted to offer up, that rule of thumb is sound.
Thank you. Ms. Billings.
You know, it's hard to take the report, but also too, I mean, I keep coming back to, and even though I know we can't get into it, the social economic changes that, you know, either national policy or everything else that, you know, has to do with this. And I just know myself that, you know, say like, we had other events. 70s oil embargo, inflation, the dot-com, everything else is up through. We have these trends with it, and I get it. But you know, back in 2006, you know, things really changed because when we had that housing crunch and stuff, at the same time, we were having a reduction in the workforce because those baby boomers were retiring out. So everybody was scrambling for workers. You were paying more money and stuff to try to get people. So that is a bigger nut that you have. And so you had that inflation that was going up, that was with it, building contractors, you know, going with it. And then also too, you know, that COVID rush really put significant changes in everything. It just really did. We had supply chain problems, parts were costing more. We don't build anything in this country anymore. And all of those reflected in the prices that we had. That drove town budgets up, trying to compensate for this. And, you know, of course, that turns into the jails, it goes into, you know, the schools. So, I mean, to me, that was like a really important, you know, time. And I know we can't go back through with this report, how much of this information and these, you know, graphs and the data that it is, how much does that dovetail in what was happening that was out of our control? Because you guys are spot on, it's costing more. And also too, you have also the social media, a lot of misinformation out there. You know, a lot of people don't know financially literate how the town budgets work and stuff. So we're all feeling it here and stuff and trying to do our best. But I don't know, there's a big socioeconomic thing. I just think that we're just kind of forgetting about and why people feel the way that they do. And how can we reconcile that?
Senator Bickford.
Thank you, Madam Chair. My question kind of goes along with what Ms. Billings brought up about the COVID times, COVID pandemic. Was that in 2022, municipalities, I think I heard you say that municipalities had a big jump in their spending. Was that because of the free federal money coming in from the COVID pandemic? And if so, how do we claw that back? How do we tell municipalities to stop all those new programs that they designed because they had free money?
Apologies, Senator Bickford. I may have to mull on that one for a little bit. You know, in our analysis of the federal funds flowing in, we did identify that there were, you know, big jumps from the COVID money, but sort of the focus there was on whether this was money that, you know, if it were taken away, would suddenly result in a big jump in municipal spending. And sort of we sort of took that out to the side, you know, on the basis that those kinds of one-off programs aren't the types of things that tend to get replaced with property taxes, you know, if they disappear. I think our example was the big Presque Isle Airport improvements. But in terms of the jumps in municipal spending for more regular business, you know, we do have that data on the appropriations. And, you know, there were jumps post-COVID, but what we were sort of saying was that they were just going alongside inflation. So they appeared to be municipalities' cost basis increasing rather than kind of out of control spending. Yes, and I'll just caveat a comment that I made slightly previously to Dr. Allen. I got it wrong in terms of the timing of the increase in the inflation and municipal spending. The years were the other way around. Big inflation was in 22, but the spending jumped mostly in 23. and then in 24 as well. So it's kind of, you're seeing the inflation appear, on a 1-year lag. So I think it probably is worthwhile us producing those cost burden charts as a share of income for the statewide figures and putting it in a little memo. I'll just caveat that those numbers won't be directly comparable to the ones used in the report, because we've tried to use in the report measures that can be analyzed down to the municipal level. And that data are not available for more recent years for municipalities. It's just a function of when the ACS gets reported. So we can give you this information to check whether statewide data, indicates a sharp increase in the last couple of years in tax burdens. Just be careful with comparing it to the municipal level measures in the report.
I had Mr. Woodbury, Dr. Allen, Ms. Billings, and then I would like to insert myself in the queue.
Fair enough. All of the examples that we each bring of people who are facing a burden and a crisis are examples of Maine residents on their primary homes. And the other thing that we've, known for a long time is that Maine has more second home, more vacation properties than any other state in the country as a portion of. So one of the pieces of background data that I really wanted to get for this committee, and I just did it. So I'm going to explain it. But how much of the total amount that we pay in property taxes is on these homestead properties owned by Maine residents? So I asked Peter and Mike to give me some of the additional background data from the municipal valuation report. And they separated it out by the valuation that is homestead property, the valuation that is non-homestead residential property, and everything else. I could then apply the tax rate in every single one of Maine's 483% communities to each of those valuation measures to make an estimate of how much of the total property taxes in the state or in any one community, but let's just go with the statewide for a minute, we're paid by homestead property, we're paid by non-homestead residential property, and we're paid by other forms of property. And, some of that's commercial, some of that's rental property. I guess rental would be residential. So some of it's commercial property, it's big box stores, whatever. But the amount that's paid by, according to my estimation, the amount that's paid on homestead property is only a third of the total amount that we raise in property taxes. So in some ways, if that's the piece of the property tax problem and dilemma that we really want to focus on, it's an easier problem than, because it's only 1/3 of this total pie that we're trying to find relief for. And, that to me is really an important way to focus our approaches to providing relief. Thank you.
Thank you. Dr. Allen.
So Steve addressed in his last statement, I was just going to point out on page 12 that shows the growth and commitment. You can see it starts to really grow in 22, and then 23 and 24 is when it really starts to take off. And my guess would be 25 is probably going to show sort of a similar growth rate. But just getting back to who we're trying to help and so forth, I would just point out that the deferral program is sort of designed to help that person who's sort of home rich but cash poor. So I mean, there is sort of a mechanism to help that retired individual who has a valuable asset to sort of tap that asset to help stay in their home. And if you're in the deferral program, even though the state is paying the property tax, you're still eligible for the property tax fairness credit. So the state, for the purposes of the property tax fairness credit, the state is sort of saying, all right, we paid the bill, but that is still a burden on you because obviously it's going against, there's a lien going against the house. And so you can still get reimbursement through the property tax fairness credit for those taxes too.
Ms. Billings.
In response to Senator Bickford, I would have to say my experience has been with my colleagues and stuff that most of the money that was coming, I think most towns themselves, you know, if there was something they could do, like if they could get money for fire station, if they could get money for water and sewer, because I run you two utilities. You know, and we had some money that we did with sea level rise, that we rose up some roads. So, you know, most towns I think do the practical thing. I'm not too much into fluffy stuff anyway. And, you know, and finance stuff, a lot of that I take care of. But I think, you know, overall, it probably saved taxpayers in the end, because if we had to go to loans for it with high interest rates, those impacts have felt much down the road. So I think it did give us an interjection. You know, maybe some of the other money that was going to nonprofits that were doing more of the social programs and stuff like that. I don't know how you measure that, and that's not our concern. But for the most part, I think that we were pretty frugal, but it did help us long range on capital projects. We had backed up that we could improve a lot that we could not do. And whether it was ratepayers, or it was taxpayers, there was a long-term benefit that they're going to gain out of it.
I really appreciate the conversation, and I think I would say I'm hearing a lot of consensus around sort of the targeted relief, identifying who is most burdened that our programs aren't reaching or are partially reaching, things like that. Being really specific with how we spend state dollars on relief, sort of what I'm hearing from folks and from head nods I've seen. I want to just sort of more broadly say, as Representative Matlack and I have been thinking about how do we get from here to the end. I think it's going to be important for us to sort of look at every idea or every line of question or curiosity around data gathering, or to have that question always of, if we learn more about X, what is that informing for a policy change? And we have this, I think, phenomenal list and really comprehensive of ideas from task force members, things that we are and our staff gleaned from the report, public comment. So there's a lot of things for us to look through, but between now and the end of this month, we've got to see what of those items a majority of us, I don't necessarily say that's going to be the test, but that have some traction to continue to pursue. And in doing that, we have an opportunity to find out, if we do think this feels right based on everything we know now, what other data do we need to have in order to dial it in to make it work? And those can be research questions for PPI, I think for main revenue services, together or separate, depending, potentially for our municipal partners, depending on bandwidth, county partners potentially. But I just want to lay that all out there because I have so many things I'm curious about. But I want us to always ask the question as we determine where we're going to go, and where we're going to ask people to go on our behalf, to think about, if we find out this information, how is that going to turn into a bill? Like, essentially, as legislators, at the end of all this, we will need to have anything that we feel we want to move forward with has to actually be dialed down into a policy proposal. We don't have to have all the details sorted out for the next legislature, but the more that we do, the sort of better off we'll be. So I just wanted to like step back and kind of frame that, because our sort of the way that the conversation can go from this moment to the rest of today and the next meeting the ultimate goal for us is policies that are implementable, that are realistic, that we have the data that we need to figure out how to design. So I just wanted to sort of level set that. The other thing I wanted to mention, as we think about how we're making that to-do list for ourselves and for our partners. I should have mentioned the analysts can help us do research too. I just take that for granted being in the legislature, but for those of you who are not, I think folks will probably note, and it's written at the end of the agenda, but I did want to just highlight too that we are going to have a meeting with the taxation committee to sort of check in around where we're headed, what they think about that, if there's things that they it's sort of funny to say they because it's also us, want to make sure we don't forget, anecdotes they've heard or concerns that they've heard from other legislators they want to make sure on our radar. We're going to have that check-in with them, but ultimately the decision about next steps will lie with the task force in terms of proposals we want to advance and research more. So I did want to just kind of give that context because I mean, I'm hip to just like talk at this horseshoe for many hours about property taxes, but want to keep us, as we move into the sort of next part of the discussion, focused on those interim steps and goals. I don't know. I do want to ask if members do have other really specific questions for Mr. Hoskins. And Mr. Hoskins, if I don't know how long are you able to just sort of be around if things come up versus, and I'm not asking you to be around all day, but just trying to understand sort of what your availability is as we discuss more specific proposals.
Yeah, I will be listening in on the meeting until you adjourn. If you give me specific windows to be, fully available for Q&A, I can make sure to be, right here and able to answer like this as you want. But otherwise, I'll kind of be doing a few things in the background and keeping an ear on things for the rest of the day.
I guess I would ask just committee members with that, task force members with that in mind, were there any other questions that you had? I'm sure more will come up, but we can also kind of keep a running list and not have to pepper you one by one as they come up. Okay, I'm not seeing anybody with anything else on their mind at this moment. So thank you for continuing to listen. Potentially, I guess I would say maybe if you could be available after our lunch break, just in case we sort of have a little queue at that point that we want to put in front of you. That might be a nice check-in time if that's all right. It's 1 p.m. our time, supposedly.
Sure.
But if that changes, we can send you an email about our shifted schedule. If that's all right.
Yes, that's fine.
Okay, fabulous. Thank you for being there. So because I think we were definitely gathering more information, but also starting to share broader picture solutions that maybe have really more targeted policy proposals behind them. I think it is a good opportunity to shift into that discussion more pointedly, if you will. And our fantastic staff have created a bunch of materials to sort of assist in that. I think they're new to all of us, so there's going to be a lot to mull over, which is why I was sort of mentioning that we have till through the 30th to really hone in on stuff. So if something is of interest to you today, but you need to think about it more, that's okay. We're not going to make any binding or final decisions at this time, but we will at some point very soon. So Rachel, seeing as you're the one at the microphone, do you want to orient us to these materials?
I do. Thank you.
Thank you.
So I think your working documents, the ones you're going to rely most heavily on today, I think, are going to be the colored copies with this cover page in landscape format. If you don't have one, there are extras here on the end. This says proposed recommendations for task force review. The chairs had asked staff to compile all of the recommendations made up to this point for the task force, but in particular, focusing on, first of all, we focused on recommendations specific to property taxes in the state. There were recommendations that were a little outside that scope. So we didn't include ones that weren't directly related to property tax and property tax relief in the state. So in this packet, it's categorized into 5 broad topics, but the information is coming from your recommendations that were made in 2025 that were noted as of more immediate concern. Some of those were also included in the interim report, but others were not in the interim report, but had been flagged as of more immediate concern. They also, in these 5 charts, are recommendations from PPI's report. They also include recommendations from all public comment received to date. And your recommendations, again, that you had submitted to us from the last meeting until today. And so all of those have been consolidated and categorized, grouped by broad topic, and then represented in charts by subtopics and the proposals. I'll walk you through the charts in just one moment, but in your packet with the blue agenda on the cover, I just wanted to note that on page 6, you will find the full language of recommendations that you all submitted to staff this interim, so basically in the last week. So your emails or your attachments are all here for the detailed look. And then on page 36, I believe, yes, as we have done with all of your previous materials packets, we include the public comment that we had received from the end of the last meeting until the next meeting. So we have received 2 new pieces of public comment there in the back of this copy. And as I said, all public comment was reviewed by staff and included in the charts, and that includes the 2 in here. So you have kind of those detailed bits, and I'm feeling, I think there's one other on page 34, the cover page is on page 33. You have the sections from PPI's report related to their 3 recommendations that have been lifted from the report themselves, their language for their recommendation. There are 3 there. Those are also in the charts, but the more detailed language is included in this packet. We color coded it to try to ease the conversation. So you can listen to the colors so you know what to refer to. On the first packet, you can take them up in any order that you would like. But the one on top in your packet is on, we affectionately call this buff colored paper. Those of you who are around the legislature are laughing because you know how we feel about our colors. This is buff. These are existing relief programs. This one does have quite a lot of information. So when you turn the page up and then fold the little staple down, you'll get the continuation of the chart on the back. It's most extensively about existing relief programs, whether it's essentially proposed changes to existing relief programs broken out by the types of relief programs. And then some other ideas are on page 3 of 3. So that's your buff colored packet. On blue, this is front and back. Really only one column carries on to the back, but these are recommendations related to the property tax assessment process. There is a little key at the bottom so you can identify where the recommendation had come from, and that's on all of them. On purple, you will find recommendations specific to municipalities and counties, excluding school-focused recommendations. Salmon. The yellow might actually have a different color for that one, but salmon. These are new options for assessing property tax values, generating revenue, or shifting revenue sources. Front and back. I'll note the one on the back was one proposal, comprehensive reform of state tax structure. So one comment. And then on yellow are changes specific for school funding single-sided sheet. We realize, of course, that this is a lot of information. Some of it is information you're familiar with, because they're your proposals over the course of our work. Some of it might be because they are public comments that you have read in the past, and from the report. But the idea here was to bring it all into one spot and categorize it so you can try to focus your discussions around these broad topics and ideas, and to help narrow the scope as we move forward. So we're happy to guide you through some of these. One thing that we did add to help direct you, other than the attributes, and I know highlighting is a little bit different on each one because of the color, but if it's highlighted, that those are the proposals that you all have made this year. So the highlighting indicates a recent recommendation from a member of the task force. So with that, I'm here, staff is here to help you. We can answer questions potentially about background or where to find information. We're here to help answer questions about process, particularly the legislative process as well. But otherwise, we'll be diligently taking notes, but happy to answer questions as they come up or to record questions you might have for others. But with that, happy to hand off with the materials.
Thank you. And thank you just in general for the immense amount of work to put it into a more user-friendly format. Yes, I appreciate it. We all appreciate it. Just to clarify, you said, note taking can we designate somebody? Doesn't matter to me who to take any notes for Steve in case we want to ask him questions after lunch. Okay. Perfect. Thank you. I'm like, I don't want to add that to my to-do list, so thank you. All right. So I think really part of why I was interested to move into this section is this first one, the buff one, to practice my color terminology. I think is like a really a good place to transition to, because so much of what we were talking about was how do we help the homestead folks that are unable to sort of to afford essentially the changes that they're experiencing in their property tax bills. And I think the conversation around existing relief programs is sort of the natural place to look into some more specific proposals that members have put forward. I don't have like a real strong vision for how to work from this I know how I would do it personally, but working with you all through it, I think might make sense to just go through each column and see, just take the temperature of folks. Is this something that you think has merit, doesn't have merit? What more do we need to know? And I probably can't spend, half an hour on each one, but it would be helpful to know if something that was a recommendation this year, now that we have different data, is it still something we want to look at? Or is there something from the public that we haven't discussed that we really want to make sure we do discuss? We want to flag those things now so we can have that further refinement for the meeting at the end of the month. And if anyone has any other brilliant ways they want to approach it, I'm all ears, because while we are tasked with facilitating, we don't always have more ideas are better than fewer ideas, I guess I would say on that front. So we've got the three basic ones, not basic, the three, the trifecta, I should say, of property tax relief programs here on the first page: homestead exemption, property tax fairness credit, property tax deferral program. And then there's this box that spans all three because it touches, I think, upon all three. I'm just going to start right off the first bullet. We had from a task force member to expand or increase the homestead exemption, also public comment. Curious what folks think about that, sort of in light of conversations we've already had or other things you've been thinking about. Mr. Woodbury.
Thank you, Madam Chair. I like that the homestead exemption is homestead targeted. What I don't like about it is that it uses precious state dollars to some households who don't have a high burden. And so, for example, the value of our current homestead exemption averages about $300 per homestead. I would rather give $1,000 to the third of homesteads who have a really serious burden than I would to give the 300 to everybody. I prefer the most narrow targeting.
Thank you for that perspective. Mr. Peters?
I fully agree with Mr. Woodbury, especially since I think our proposal at the end of last session said that we recommended that the state do 100% of the reimbursement. So it's already coming from the state resources, if that's actually going to continue to be our proposal. And so the property tax fairness also 100% comes from state resources. I think where I would support slightly increasing the homestead exemption is if not 100% was coming from the state, if the municipality then had to increase tax rates on all property, then it kind of spreads out some of that burden. So I think that's how I've been thinking about, fully concurring with Mr. Woodbury. However, if everybody was agreeing that we wanted to increase the exemption, I would still not support it if it was fully 100% from the state.
Got it. Senator Bickford?
Thank you, Madam Chair. I do like the homestead exemption. I like the idea of increasing it. I like the idea of the state reimbursing municipalities 100%. I do, however, disagree with picking winners and losers. Who are we to tell someone what they can afford and what they can't afford? That's not up to us. If we're going to give a homestead exemption, give it to all homesteads or don't give one. That's just my opinion.
Thank you for sharing that opinion. Well, I mean, I think this whole conversation is really difficult because without getting into everybody's personal budget,
Exactly.
I might have a different opinion about what they can afford.
Mhm.
So
Yeah.
it's, I think we have a responsibility to sort of try to understand for those folks that want to age in their home and have a significant loss of income or what have you for different reasons. Do we agree that we want to try to help those folks more than a person who has 1,000 times the income than their property tax? You know, I mean,
Right.
we don't have endless resources, so I disagree with you to some extent about
Yeah.
um,
We don't know that.
winners and losers exist outside of the framework of property taxes in our society writ
We
large.
don't know their disposable income.
Right. There's a lot we don't know. That we don't really have the right to know,
Right.
I would say, about people's households personally. Any other comments about the homestead exemption? Mr. Leishman?
Thank you, Madam Chair. I would just point out, Mr. Woodbury had his Homestead Plus idea, which seemed pretty good because I agree with the concept of not wanting to give the homestead to people that don't really need it. But I also agree with Senator Bickford about that we shouldn't be picking winners and losers in this. But the reason I pressed my microphone down, I want to say that when I speak with people, the homestead exemption is symbolically very important to everybody. And if we were to come up with a solution, I think, that took it away from some people, I think the consequences would be quite negative. It's whether people need it or not, they like having it. And it feels like a privilege of citizenship, of residency and that sort of thing. So I just want to throw that comment out there.
Ms. Lear?
Yeah, I think because we have that really interesting statistic about the proportion of property that is owned not by Maine residents in Maine. And although that doesn't necessarily directly impact taxes on those properties. It certainly drives affordability for home ownership. Given that homeowners in Maine are competing with the second homeowners for desirable lakefront and oceanfront and other properties, I think this is a valuable tool to more address that affordability issue and maybe change the dynamic. But if we think that is outside of the scope of this committee because it is not a direct property tax impact, then I think the property tax fairness credit is a more targeted approach.
I think the one other thing I would just add about the homestead exemption, the thing that I like about it is the timeliness of it. The fact that it is delivered at the same time as the property tax bill. And so I do feel that the recommendation we had previously around could the property tax fairness credit or some combination thereof, or if that could be delivered at the time of the property tax bill, then you're getting, in my view, sort of the best of both the targeted and the timely criteria that I think are really important to folks. Ms. Billings.
Thank you, Senator. The homestead exemption is really important to me, and, you know, I like Mr. Woodbury's proposal. Maybe there's a little few tweaks it could do with it, but, you know, I echo what Carrie says, because, you know, that homestead, there's a perception to that. It just really is. And the other thing is too, is, you know, I respect what, you know, Senator Bigford says also too, because it's hard with the winners and losers. And sometimes for me, like if somebody has a lot of means, but they live in the community year round and stuff, and maybe don't need the homestead. But the only thing is they are supporting the grocery stores, they're supporting the gas stations, mechanics. So there is an economic value to that also too, that probably offsets, you know, whether you should get some or not in the end. You know, I probably feel, because, you know, I know everyone around in the community. So, and also too, you know, we have to figure out the housing thing, because, you know, as people just can't afford this or whatever it is, we can't build back the house and for what you lose. And that's a tremendous, you know, not to try to figure out. And also too, like with a homestead, I do think somehow or another, you know, it has to kind of like either rise with inflation or rise with the value of the thing with the sales and stuff, because, you know, that home that, you know, Mr. Woodbury has in Auburn is 3 times more, you know, where I am. And I don't know how you tweak that, but it's just a reality working families face for us if they want to have a home. So we can have the school and the grocery store and the post office and everything else. Thank you.
Representative Matlack.
Thank you, Madam Chair. I was thinking about the means testing and remembering back to a bill that we passed that was an absolute disaster, and it required municipalities to accumulate data on people's incomes and so forth. I don't want to go back there. So I would prefer to focus on the property tax fairness credit as a mechanism for assisting people who really need it. And because that goes through their tax returns and the information stays with MRS. And I think that the homestead exemption should be singularly attached to the amount of money that they can receive in reimbursement from the town for their property taxes.
Senator Bickford.
Thank you, Madam Chair. All 3 of these programs, I think, can be done together. Homestead exemption encourages people to stay in Maine year round, keep their homes here and live in them. Property tax fairness credit, again, that's critical for many property taxpayers, especially with the property tax burdens that we're starting to see. I know people that are paying over $1,000 a month just in property tax. That is, to me, that's a mortgage payment. I mean, you can pay for your house and then still have a mortgage payment every month until you're 90 years old. It's ridiculous. And the property tax for deferral program for the people that really do desperately need it. I like all three programs.
Well, I think that it's a great, I would agree. It's a great suite of tools. And there's some interesting proposals of how to maybe meld them together. Representative Nutting and then Mr. Kellyanne.
Thank you, Madam Chair. The homestead exemption within each of our towns is not means tested. Everybody gets the
Right.
same.
Exactly.
So I see the homestead exemption as simply a way to get money from the state coffers into the town coffers, city coffers, because it is raised by a combination of different taxes, income tax, sales tax, as opposed to property tax. And the income tax depends on how much you make. Obviously, the sales tax to some extent also depends on how much you make. So it is, those are means tested coming from the state as opposed to the homestead. So I like homestead. I like the existing relief program as well. And I'll save my comment about the third one until we get to it.
Okay. Just to kind of get through the homestead. So I think heard some of the pros of it, some of the sort of downsides of it. Overall, I'm hearing that folks do think has been an important tool for a variety of reasons. Just to touch on the other bullet points, the expand eligibility to include irrevocable trusts, particularly when beneficiaries are long-term full-time residents. That's not something I don't think we've talked about in great detail. It feels very specific. Ultimately, the task force needs to get into specifics, but I don't know if anyone had any overall thoughts about that. Representative Matlack.
I don't recall off the top of my head where the discussion went, but we had a bill this spring in taxation that involved irrevocable trusts, and we said no.
Senator Bickford.
Thank you, Madam Chair. I do kind of like the idea of expanding that to irrevocable trust. The biggest reason that I'm aware of that people do put their properties in irrevocable trust is so that if they end up someday in a nursing home, their property isn't taken by main care. Because if you're in the irrevocable trust long enough, then it goes to your heirs and nobody could take it. So it's still your property and you still should get that homestead exemption, in my opinion.
Mr. Leishman.
Thank you, Madam Chair. But I believe in a irrevocable trust, it can be, the beneficiary can be an out-of-state individual, can be a minor. And we don't know this. I don't think we have access to the trust documents. Yeah.
You as a municipal official, you're
Right.
saying? Yep.
Right.
Senator Bickford.
Yeah, and I appreciate that comment because at that point, it's not an irrevocable trust anymore. When that homeowner passes away, then the heirs, if they choose to live there, can wait a year and then get the homestead exemption, or they can stay out of state if that's where they are, sell the property, and the new people will have to fall into that same, 12 months before you get homestead exemption. So I don't care who their heirs are, because that's not who you're protecting with this homestead exemption. You're protecting the people that live there.
Mr. Leishman.
That's a good point.
Yeah.
I think I'd like maybe to hear from somebody who does estate planning or something about exactly how an irrevocable trust works and what kind of information we might be able to get legally from.
We could put that on a potential list of things to figure out. which we will make a vote on at the next meeting. Mr. Caliendo?
I can support because I'm reading exactly the suggestion here about when beneficiaries are long-term. It's exactly what I did with my brothers to take care of my mother. We all live in Maine, or did. One of them left because mom has passed, and we put her home in an irrevocable trust. My brother, who no longer lives in the state, was the full-time caretaker, and it was a big deal to say, we got to take care of mom. So otherwise, Senator Bickford answered all the other comments I was going to point to, right? And now the new owners are just in line. Now they're paying their full share of the property taxes, whatever their homestead situation is. So thank you.
Ms. Billings?
I hate to be the irritant, but anyway, that's what I am was something. We're talking about property taxes and, with property taxes, it also means to me that, especially with the homestead and stuff like that, people are occupied in it. But the one thing is, you mentioned about the main care thing. I can't tell you how many properties are tied up with that main care thing that either they don't get sold or they're vacant or they're going into the ground. And I just wish that there was something out there. No, that's not what this task force is, but that means people aren't in them. They're not buying gas. They're not in the grocery store, and it's an economic drain. And I probably have 10 in Stonington. And other communities bigger than I am, they have more. Certainly, probably Bangor's got, tied up, and they need to have a system in there that figure out what the value is, get them back on the market. If the person can't come, I understand it's personal property, but that has to be fixed.
Appreciate learning that, and glad we're not going to turn this committee also into the DHHS committee or the HHS committee. So that's probably my least desirable committee. Okay, so we have a potential question there. The next one, we heard a little bit about that, I think from Mr. Peters, expand the homestead exemption for individuals who have been at the location for 10 years, subject to means testing, but the 100% reimbursement part. So I tagged you there, Mr. Peters, as part of that from the task force last year. Folks' opinions, same, have changed since then. Senator Bickford.
Thank you, Madam Chair. The only issue I see with this, well, two, the whole thing, basically the means testing. I still have a problem with means testing. And I worry about, we talk all the time about seniors. We want to protect the seniors. We really do. We want to protect new people, 25-year-olds that are married that need the same kind of help that seniors do. So I would really have a problem, especially young people starting out. They're not going to be at their top income line at 25 years old. And to wait 10 years when they're 35, when they probably could afford to not have the homestead, it's counterintuitive to me. I would like to see the 10 years taken away and the means testing taken away.
Any other, like if folks generally agree with that, we can start, if there's just no interest in moving forward with anything, we can start sort of scratching things off the list. Anyone, I'm putting people on the spot here, passionate about the location for 10 years component to the homestead exemption?
About keeping it?
Passionate about keeping it. Okay, I'm going to say I'm seeing no interest in that. So I'm going to say doesn't advance to the next level.
Okay.
Subject to mean testing, homestead exemption in its current form, but subject to means testing. Anyone interested in pursuing that further? Seeing none. Mr. Caliendo.
if we're not addressing the plus recommendation. And no, otherwise
yeah.
it's yeah. It's too
Yeah, just sort of
complicated.
as its own question.
It's very complicated.
Yeah.
I don't know how you do it.
The 100% reimbursement to municipalities.
Yeah.
Senator Bickford is passionate about that. Ms. Lear.
I also agree that that is a wonderful idea.
I am passionately opposed to this, and I will tell folks why. And it comes from my good former co-chair, Representative, the Honorable Joe Perry, sort of educating me about the history of the homestead exemption and really why it was created. And I do believe, and I could be wrong, but my takeaway is that because our Constitution requires that everyone be taxed equally, and we do have so many folks who are second home owners, many of them are out-of-staters. The homestead exemption, when it's only 50% reimbursed, creates a shift of burden within the community between the folks that are homesteaders and the folks that are second homeowners, also commercial. So the homestead, in my view, was making some adjustments that ultimately kind of sync up with how many other states approach those types of properties and how they're taxed without actually going in and taxing them differently. And I think, because I am here with those folks in mind that own their homes and are having trouble affording them, that if you have the state paying back 100%, then the shift that I think is beneficial from a policy perspective doesn't happen anymore. And it goes 100% onto income taxpayers and sales taxpayers. And so that's why I kind of actually like it to be bifurcated that way. And so that's why I don't want to see it changed to 100%, just to put my opinion out there.
Yeah.
Senator Bickford.
Thank you. I'm gonna push back just a little bit on that. I'm gonna explain why. Your seasonal owners are paying for schools. 40 to 60%, whatever that amount is of the municipal budget that goes to schools, they're paying that along with everybody else. And they don't have kids in school, so they're already paying more than they really need to. And I'm gonna push back on the business side too. I'm in a service center community. I toured a bunch of businesses this past week with one of the governor primary candidates, and it is amazing what they do, the size of the scope of their businesses, and the amount of property taxes that they pay. For the state not to pay 100% is negatively impacting them with the most availability of moving out. They can go to South Carolina if they choose and do the same business they do in Maine. We have a location in Lewiston that has another location, I believe in, I don't remember the other state, but they have threatened to consolidate and put everything in that other state if property taxes continue the way they are. So I understand my good friend from Hancock County, but I humbly disagree.
Mr. Leishman.
Thank you, Madam Chair. So, and if we're looking at these in a silo, that's one way, but we have a lot of other proposals here, and I'm thinking, and this would speak to your concern. If we agree to do a split tax rate, constitutional amendment to do a split tax rate, the second home buyer will be, I hope, taxed more than the residential homeowner. So in that way, we could extract more from them rather than in the homestead.
Representative Matlack, I think you were next.
Yes. I actually come from the Joe Perry School of Taxation, and and I agree with him that we don't necessarily need to be 100% reimbursed by the state. I believe that it does spread around the burden of the homestead exemption to people who do not participate in it because they're from away. And I would not be inclined to go with 100% reimbursement to municipalities.
I would say, this one here might go in the parking lot, like we'll continue on. We can talk about it more if we want. I'm not gonna make everybody at this horseshoe raise their hands of who actually has kids in the school right now, but I'm guessing it's not many of us. And I just do want to say, I appreciate living in a community where there are educated folks doing all sorts of important jobs and working in those businesses. So I'm happy to pay the education portion of my property taxes for the benefit of my region. And just needed to say that. So thank you for hearing me on that. If anyone else needs to say something 100%, I'm happy to hear it since I just did that to y'all. But if not, we can leave it. Mr. Caliendo, go for it.
The business threat is real, as that's been an ongoing discussion, having a home base in Maine and having multiple locations across the country, where unless you're a restaurant, you can easily move any hard goods related products anywhere. And consistency in making sure that that happens and is fair across the different states. So that's a really important thing because the for-profit people do pay for everything. So to be, have a level playing field with the competitive landscapes.
Senator Bickford.
Thank you, Madam Chair. Yeah, we have actually in Auburn, we have a huge awning company. That their competition has bought up several awning companies throughout the US, driving the prices down, and they're competing with these same people. Now, the easy solution for them, move to a low tax state, low property tax state, and do the same thing they're doing now. They can compete better that way. Fortunately, the quality of their product and it's high end. They sell a lot to the Cape Elizabeths and the coastal ownership, but it's a tough market out there.
Shall we move to the property tax fairness credit column, or should we go straight to Mr. Woodbury to tell us how he would put all the columns together? Folks have a preference. It's up to you.
That to me.
Yeah. Mr. Woodbury.
I think there are two issues with the property tax fairness credit. One is that it's a retroactive reimbursement that many people don't even associate with property tax relief. So if we could make it something that was more of a prepayment, a prospective prepayment, that would be an improvement. And second, the maximum benefit isn't anywhere near enough to deal with some of the burdens that some households now face. So my highest priority, and I probably said this too much, but in structuring a reform is making the maximum refunds, as in the maximum relief in this sort of program, much bigger than they are now. And recognizing that money doesn't grow on trees and that raising another tax is going to be hard to do. I would prefer that what I suggest and what my proposal is trying to do is to take the money that we're already spending on property tax relief stuff, and concentrate just a bit more of it into the property tax fairness credit. So that's, and I would support any moves this committee wants to make to find ways to increase what the property tax fairness credit is. I think it's the best program that we have. I just really think we have a chance here to make a big impact rather than a incremental impact if we better focus the resources that we already spend.
Thank you. I'm gonna break that down a little bit. There's sort of the what and the how. And I think a lot of what I heard from you, from you, Mr. Woodbury, was started with the what, and it does match up with a lot of the bullet points that we have in that property tax fairness credit column. So I just want to do like quick gut checks. The topic of expanding eligibility and increasing the benefit but I think those are two different things. Increasing the benefit amount, that has been a recommendation. It's come up in public comment, et cetera. Does that resonate with folks? Still, it seems like yes. Okay, so that first one. Second one you touched on, Mr. Woodbury, about the benefit, some way that it's offsetting the property tax bill rather than making an income tax refund. Is that still resonating with people, that timing issue is one that if we could work it out would be an improvement? Mr. Caliendo?
Piggyback, yes, agree, because if they're struggling, waiting for money 18 months later is a challenge. There is an entire system in place already about how to get estimated income out in front of people, and it's the entire workers' comp system. Somebody goes out on workers' comp, they got it, the company that they work for has got to submit. So there is actually processes that could be considered as a piggyback to understand what someone's going to get compensated when they're legitimately out. So you just say, whatever that submission is, I'm just making a suggestion, the ease of getting that information. The whole business community is dialed right into that. So you just get the same data. I'll leave that there. Thank you.
Mr. Peters? Or not? Okay. I was trying to suss out if there's a almost hand raise or not. The next bullet point, I would say maybe the point of that, we don't need to focus on the numbers, but again, I think to your comment, Mr. Woodbury, or your proposal, this previous recommendation was try to decide on a particular percent of income that is just unreasonable for people to be paying and provide relief for those folks. It seems like people are still interested in that. I don't know if 10 and 6 is the right numbers, but the idea of really a hard cap on how much of your percent of income you might pay, or you're required to pay, that's still sort of landing with folks as worth pursuing. Okay. Seeing yes, generally. Mr. Peters?
Yeah, it'd be interesting to see what that fiscal note would be. And, the proposal is, it would be great if we could provide relief at 100%. And then that's kind of the starting point. And we don't need to negotiate against ourselves, I guess, as far as figuring out what the best proposal would be.
Mr. Woodbury?
The one complicating factor that is maybe worth grappling with is is there a value of a home or an income at which we don't think it's the state's responsibility to provide relief anymore? And the way that we dealt with that in the current property tax fairness credit was by limiting the amount of property tax that qualifies for consideration in the benefit. And so this version that I drafted for everybody suggests that that would be 6,000 for a one-person household or 8,000 for a multiple person household. So what that effectively does is make it so you can't be living in a $2 million house and think the state is going to be giving you, relief just because it's more than it caps a little bit the extent to which somebody who is by some measures well off is using the dollars that are going into the program. So, I mean, I am going to defer to Mike and Peter to really kind of work on what how a formula might work. I mean, I don't mean to say I won't work with you, but I think there are formula parameters you can tweak, and these are two of them. You know, at what percent of income do we want to start providing benefits? Do we want to have a total cap on, you know, like 100% reimbursement over 10% of income is the example here? Do we want to limit the amount of property taxes that are eligible, or at what level do we want to limit the amount of property taxes that are eligible for relief? And yeah, so I mean, so those are pieces of it. I'm sorry, I'm being a little bit scattered here, but the other thing that I think can be valuable in these programs is to make sure that people still have skin in the game, so that it's not as if we've stopped residents of a community from caring how much their community spends. So to say we're going to reimburse 100% once you get to some level may not be where we want to end up, because we really do want the residents of a community to still have skin in the game if their community decides to spend more. So, again, this illustrative version that's in the thing I distributed says that even at, whatever this high level is, only, the state will reimburse 80% above that, but you're still on the hook for 20%. So you've got some skin in the game.
Senator Bickford.
Thank you, Madam Chair. So I guess my question goes back to limiting property tax liability to no more than 10% of income. And you're saying the state won't help above that? Is that what this is saying, or?
No, it's saying that the version that's written on our taupe.
So over 10% the
sheet.
state pays?
Above sheet,
Is that what
it
this-
says they pay the total amount above 10% of your income. The state pays for
Oh,
you.
the state pays.
And I'm suggesting that might be a little too much.
Okay.
Maybe 80% of the amount above 10%. Sorry, this
Yeah.
is so convoluted.
Well, and
Yeah.
maybe Rachel, I don't know if you could remind us, this third bullet, TF 2025, was that was in our interim report with those numbers? Or
I think it was, I don't know if the numbers were in there. It wasn't in the interim report. It was in the discussion document distributed December 4th.
Got you. Thank you.
5th. I believe it was based on a recommendation put forward by Mr. Woodbury at that time. But it is different than the more detailed proposal submitted by Mr. Woodbury, which is being referred to as Homestead Plus, which is in the packet. So I think based on a similar concept, but perhaps more fleshed out with some different parameters in the new proposal. So I think in one sense, I think that's where you were. That third bullet is where you were at the end of the last interim. And the idea has been furthered by Mr. Woodbury for the task force to consider in the submitted document in your packet called Homestead Plus.
Gotcha. Thank you. Question I have for task force members. I mean, I think what Mr. Woodbury has put forward regarding, I don't know if this is a fair characterization, but, trying to further refine this program to better address externalities, or extremes, if you will, or the folks that are not having the average experience in the state. There's that portion of the proposal, and then the portion of the proposal around how to pay for it is a redistribution of other existing state dollars that support property tax relief through tools like revenue sharing and homestead exemption. I am really curious to know, how do folks at this horseshoe feel about looking into and perhaps with some modeling around what is the impact on people's bills if the revenue sharing, some portion of it went to means tested property tax fairness credit rather than to the municipality? Is that something that task force members feel is worth looking into? Representative Nutting.
Thank you. I find Mr. Woodbury's discussion of Homestead Plus to be very pertinent, and I think it deserves more maybe modeling or something to see it. Because if if I understand what he said approximately a third of the incentive going back into the community. That only a third of it, the state money, only a third of that money goes to the people who really, in our opinion, are homesteaders or deserve the money, or if that's the group we're trying to help. So if that's true, and then he said, I think that without an increase in state funding. So I don't know how you, to your point, I don't know how you take that third and direct more of the pie to the homestead people without increasing everyone else's taxes. That's the part we have to get past, or we have to agree that we just want Dr. Allen to chip in the rest.
Chip in the rest. Mr. Woodbury.
So I've considered it beyond the scope of this task force, probably to change the size of government. So we've got our municipalities that spend so much. We've got our schools that spend so much. We've got the counties that spend, we got the state. The whole pie is kind of for purposes of what we're trying to do, it's a fixed pie. So we can either raise a revenue somewhere, raise the sales tax, whatever. It was just often the thought of the simplest thing to do. Our sales tax is not crazy high in the state. Portland wants us to have a local option sales, and whatever. We could raise the tax, raise revenues in order to reduce property taxes. But that has, I'm predicting that we won't have a consensus on how to raise a tax around this table. And I predict that we'd have a hard time at this table cutting a major area of other spending like roads or healthcare, Medicaid, other big pieces of the budget. So where I land is we just got to find a way to make the property tax itself fairer. So we collect 3.5 billion in property taxes right now, but we have a sense that there's some people that are getting charged too much of that 3.5 billion. So can we reapportion it a little bit? And what this is trying to do is have less paid by these identified high-burden households, made up by a slightly higher rate and elimination of the homestead exemption to people who don't need it, integrates it all together so that it's just reapportioning the existing property tax in a way that we feel like is a fairer, more equitable system. That's the goal. My goal.
And you own it.
Dr. Allen, you were next.
Well, Dr. Woodbury stole my thunder because we have to have a balanced budget at the state level. Municipalities have to have a balanced budget. And so there's going to be winners and losers if you're going to do something big. And so that's just the way it is, unfortunately. We're not the federal government. So Dick articulated that I think perfectly well. The other thing I'm just trying to think about as we go through all these is, again, what is the goal? What are we trying to achieve at the end of the day? What's the policy objective? And particularly for the senior citizens that I think everybody has articulated they want to help, is the goal to allow those people to continue to live in their homes for as long as they want to or can? Is that the goal? Which I make a distinction between that, and it's been articulated by people who have come before this committee over at least during the time I've been here, that it's not only do I want to stay in my home, I want to leave that home to my heirs. And so I look at those as two sort of different policy objectives. Are we trying to help somebody stay in their home for as long as they can because that's their home and so forth? And do we also want to allow them to transfer great wealth to the next generation? And are we asking other taxpayers to subsidize that ability to transfer wealth to, their heirs? Because that's sort of the reason why, as Dick pointed out, there was a cap on property taxes under the, through LD1 and the property tax fairness credit. I mean, if somebody's sitting on this valuable piece of land overlooking the ocean, should we say, well, you're overburdened because you have a $15,000 property tax bill? And to what extent should the state subsidize that? And again, it's just, I think there's two policy objectives in there, and just to what extent does this committee want to try to solve both of those or only one of those?
Representative Nutting.
Thank you, Madam Chair. My personal answer to that question is, I want to see that person stay in that home. As long as they can stay in that home and live there, a home that they raise their family. The fact that they have kids who would like to have that home is not my problem. I don't worry about them. If they want to keep that home, let them help mom pay the taxes or do something else. But that's not my concern. Just me.
Dr. Allen and then Mr. Kelly.
And that's why I continue to look at the property, point out the property tax deferral program. Because the property tax deferral program does allow somebody to stay in their home for as long as they want, but it puts a lien against the property, which means when they pass away or sell it, right, the value that goes to the heirs isn't going to be as high. But that is one of the reasons people often point to the deferral program as one that they don't want to go into. And so it's just, again, just to what extent do we try to separate the two?
I'm going to send it back to
So,
Representative Nutting.
I really knew nothing before we started this task force, knew nothing about the deferral program. But we learned at some point that the interest rate is 9%. So before I make a statement, my other question is, how much does it cost for a reverse mortgage in general? Anybody have an idea? It can't be 9%, can it? Unless it is, this program doesn't sound very attractive to me. And maybe we could make this program more attractive so that people would feel more comfortable about it. There will still be people who don't want to give up anything, any ownership of their home. But if the program were attractive, and I don't mean to compete with the local bank, but maybe equal to the bank, so that if people chose to do business with the state of Maine instead of Kennebec Savings Bank, that would be an option that they would look at. I don't think they do now because A, they don't know about it. B, they're stubborn and don't want to do it. And perhaps C, because of the 9%. I don't know.
Mr. Caliendo.
Thank you. So helping them stay in their home, absolutely. What happens next? I didn't know about the deferral program either. I find that curiously punitive. And I would say, let the free market dictate what happens next. So family, the matriarch, patriarch passes. If they stayed 15 years in a deferral program, that could eat up whatever value is there. And the only way that can be paid is to sell the property, because it could be an extreme amount. So I like the ideas of kind of capping this property tax at so quote unquote an affordable rate, and let the free market dictate. If there's heirs who want to move in and it's on the ocean and it's a $3 million home and the property taxes are 15 grand a year, well, then they should know if an heir is going to move in with their family, well, that's the tax bill. Or the heirs can make a decision to sell the property And the property tax should be valued immediately on that sale value. You don't have to go through a big valuation, but it's public information. So the property sold at 3.5 million. Now the new owner has to deal with whatever that is. And let the market have some sway here without over-regulating all of this information, but let the person stay in their home, and families can be fickle. So let them figure that out after the person passes, right? About if someone's moving in, they're going to pay the current rate at the current market value and move on.
Senator Bickford?
Thank you, Madam Chair. And it could be something as simple as, the family owns a $5 million farm and their only son, works down the road at Wendy's or McDonald's or whatever, and they both pass away, and now he inherits this. Well, if they're on a property tax deferral program, guess what? Where's he gonna get that money? Or, or you have somebody on the coast with a $15 million house that passed away, and their kid works as a short order cook at the Dolphin or whatever. Now he's gonna, that is insane if that's how the property tax deferral program works. That just is insane.
Well, I just would like to remind everyone, it is voluntary,
Yes.
right? So like nobody's being forced into these
Yeah.
choices, just to be
They're
clear.
gone, they don't care.
That, again, families can be fickle, right? That, yeah,
Yeah.
Ms. Billings.
Thank you, Senator. If I think it's Stonington and probably some of the other surrounding communities, those people that still have those parcels are far and few. So I think we're looking at the general good of the community and how we can support it. Just as a note, my ex-husband, his mother and father was in one of those deferral property tax things in Massachusetts in the heart, and they were in it for years. And when the both of them passed, there was no way that they could, buy that property or agree or whatever it was. So it just felt like it was sort of a dead end on doing something, and it ended up, by other means being sold. So it was a hard thing to navigate.
I recognize the time, my own personal interest in a lunch break that might be shared by others. So let's take a break until 1. Please feel free if you want to read things during your break. Challenge by choice. But we'll come back and resume our conversation. I don't know that we'll get through everything, but I really appreciate the great thought that everyone is putting into the conversation. So thank you. We will go on break till 1 p.m.
Man.
Good afternoon, everyone. Welcome back to the afternoon portion of the Real Estate Property Tax Relief Task Force meeting after lunch afternoon. They'll hear me eventually. Okay, hopefully everyone was able to find some food, even if it was very slow, was the report. I think that obviously there's a lot of recommendations to look at across all these documents. And I really have appreciated the conversation this morning, well, through the early afternoon. I think though, in the interest of time, what we might do to move through is just kind of go page by page, take a couple minutes to read through the points and then see what items members really want to elevate as this is a recommendation that I think, and I hope others think, we should dig into more. Possibly there might be bullet points where it's just, yes, I really like that. We don't need more information. I just want to tell people that. And others where we're going to have to think about what other information we need. But if we could just take a little time to kind of do that work on our own, might help versus me reading everyone and then discussing everyone. So with that in mind, I think there's a little bit left on page 1. So I would say just maybe finish looking at the buff document and think about on pages 2 and 3 if there's specific recommendations you want to highlight for more discussion at this time. Does that sound all right with folks? Great. Mr. Hoskins, welcome back. I don't know that we came up with any questions for you right off the bat. Do you think any?
No problem.
Okay.
I'll just continue to hover around and be available if needed.
Sounds good. We thank you for checking in on time, though.
I had time to get a muffin, so thank you for that.
Oh, good. Okay, so yeah, just take a couple minutes. I'll keep an eye out for when folks look like they're done reading. Senator Bickford has a burning question for Dr. Allen.
Dr. Allen, what is the property tax stabilization program? I forgot.
Sorry, that was the program that was passed in 2022. Yeah, it was in the short session, right? It came off the table in 2022. It froze people that were over the age of 65 could have their property tax frozen.
Okay,
And it was in
good. I
place for
wasn't
1
sure.
year and then it was repealed by
Yeah.
the legislature.
The reason I'm asking is because I wasn't sure if it was that or if it was the one that said municipalities can't go above CPI.
Yep.
What was that? Was that called anything?
That was part of LD1.
Oh,
And
okay.
that was sort of a spending limitation. sort
Okay,
of.
thanks.
Thank you. You're welcome. We'll discuss later, but you got your clarification. Okay, how are folks feeling? Anybody need more time? All right. Any thing really standing out to folks? Mis-
I'm sorry, remind us, I think before Mr. Legman joined the task force, the forest and this alternative, you had already punted that to a separate study due to its complexity.
Yeah,
that-
so happy to give that a little bit of the update again. So the legislature and the taxation committee sort of started a process regarding specifically the tree growth program. And that is an effort where Maine Revenue Services is going to create a survey with a bunch of stakeholders, interested parties, and survey assessors to sort of get more into the saplings, if you will, not the weeds, but the saplings of what's going on with that program and where there might be places for refinement. Based on the assessor's point of view, but the taxation committee did not set up a process for the other current use programs. At that time, it is my personal opinion, and it is a bullet at the bottom of page 2, that we should set up a regular review cycle for all the different tax exempt property types, so that becomes a more consistent check-in that's happening with the stakeholders. I don't know that annually would be doable in my view, but we have an entity called OPEGA, which is the Office of Program Evaluation and Government Accountability. I was like, oh, wait, where does that go? And they look at different tax expenditures in the income tax world. And so we do kind of have a model. I'm not saying it would be OPEGA, but where those are looked at regularly and reports are given to the legislature to decide if they want to make changes. So I think personally, my opinion is setting something up like that for these different property tax exemptions could be beneficial. Was the answer to your question plus a plug for the
Anything that is big, that's not immediate, that fits some kind of cycle. It's the best thing to do is get on that train.
right. Okay, so thank you everyone for taking a little bit quiet time to look at the document. Things that really stood out to folks that they want to have the task force consider pursuing. Feel free to shout them out, except for don't shout them out. I'll call on you. Mr. Peters, go right ahead.
Thank you, Senator. Thinking about the property tax deferral program, again, I want to highlight that as are there ways to tweak that so we get more uptake? And maybe put a timeline on it, like what you said, what are reasonable goals for uptake? And if they're not happening, do we delete the program in 10 years or something because nobody's using it? It's distracting, so I think that might be helpful too.
Thank you. I did want to let folks know, because it is listed with the other relief programs, that this one here, I think in its current iteration, has been around for just, I think, about 3 years or so. So just want to give that context too. Deferral, yes, in terms of uptake and the fact that it hasn't been dialed in maybe as much as some of the other ones have. So I think your point around looking at it more closely and thinking about a review time period resonates with my understanding of the program. Senator Bickford?
Thank you, Madam Chair. Yeah, to add to that, if we could look at the interest rate we charge, maybe put it at prime plus 1% or prime plus 1.5. Some kind of a criteria in there so that it's not this, 9% is, that's higher than your typical car loans or, personal loans. That's pretty high for that.
Dr. Allen?
Just for everybody's information, it is currently the prime rounded up to the highest percentage plus 1% each point. So, yeah, so.
Thank you for that. I didn't know about either.
Well, after seeing this recommendation, I actually went back to the law to again, convince myself it was what I just explained. But then I also, it's based on the prime rate reported in the Wall Street Journal on the first business day of September. So I looked at the Wall Street Journal yesterday. The prime rate yesterday was 6.75. So if we were revising it today, it would go down to 8. But when it was done last September, the prime rate must have been close to over 7 or something like that. But it's the general rate that MRS charges and has to pay if we owe. And since this is something that's secured by property and not just a tax obligation, I think the discussion makes sense that, might want to look at something that's like a reverse mortgage or something like that.
So it sounds like there's interest in kind of like refining the deferral program, seeing if there's levers there that could be adjusted to make it more attractive, have a review. Are folks generally comfortable with sort of keeping that recommendation and advancing it for further conversation? Okay, great. Mr. Leishman?
There it is. Thank you. So if we offered, like Steve had told us that some other state was doing deferred at 4% and they had a much better enrollment. If we did 4%, would it actually cost us money? Because I think you just said that we have to pay. Let me ask a question. Will it cost us money if we lowered it to something below prime?
I think if the assumption is that that would induce more people to come in
Right.
and take that, yes, because the state's putting out those funds. Over time, the program is designed to be self-sustaining, right?
Right.
As people pass away and those taxes come back to the state, that's paying for current users. But we're in, as the senator pointed out, it just passed in 2023, the new program. So we're in those early stages where we're paying out more than is coming back in. So yes.
And the program before got killed because of a lack of participation, right?
No, I think it was started in the late 80s. And as it started to get going, the budget crisis hit. And so that basically the legislature shut off any new entrants. Trying to remember when the last person that got in the early 90s passed away, and we emptied that maybe 10 years ago, 6 years ago.
Okay, other proposals that have stood out to you for further consideration, Mr. Peters?
Somebody was asking about this personal property tax one on the second page. Just, I couldn't remember the data on how much revenue comes in for that, and I didn't know how equitable it was tracked between towns. I just don't remember the impact of that, and if and who ends up paying most of it? Is it businesses or is it individuals? Or I don't remember much about it.
Any resident experts, Mr. Leishman? It's not me.
Thank you, Madam Chair. Some towns, although according to statute, we should be taxing personal property, residential personal property, and business personal property. I only know of one town that does personal property, residential personal property, I guess you could call it. So most don't. Business personal property, most do, although some very small towns with limited amount of commercial activity don't. Again, we're supposed to, you're not allowed to opt out, but people do. And just Senator Bickford and I were talking about beforehand, just so people understand that with personal property, what happens is you get a list, either you discover it yourself or they report it in, you depreciate it, and then you multiply it by the mill rate to come up with the amount of tax. So it's what kind of industry or business you have in your municipality, because can vary widely. where you've got a lot in one and you don't have any right next door. And anyway, that's how it works.
Senator Bickford?
Thank you, Madam Chair. Yeah, and we actually had a bill this past year to increase the exemption from $1,000 to $5,000. It passed and went to appropriations and died on the table. The problem is, how many municipalities actually know who has a riding lawnmower that's worth $2,000? I mean, who knows? How, what if you have, this nice freezer you use out back on your deck or whatever that you bought for $1,500? How do they even know? So one of my issues with this and why I was such a proponent of it increasing to $5,000 was to take the municipalities off the hook of being, because they're really not able to not do it, but they still don't do it, many of them.
Just before I call on Representative Nutting, just to clarify, yes, and the whole tax committee did vote for an amended version of that bill, which removed that taxation altogether
Yes.
on personally owned items. It wasn't an increase from 1 to
Right, that's
5,000. It was a complete removal, just for the record. Representative Nutting, and then I saw that Mr. Hoskins had his hand up as well.
Thank you. I think anything that we did as this task force for the personal property thing is beyond the scope of what we're gonna, I think we're going to struggle to get to something meaningful that we can do in the short term. I think it is similar to the other two items on this thing, whether it's changing exempt property. Now, any one of these three things would bring large crowds, I think, in to see us if we propose, or the taxation committee, and should be done perhaps separately and not by us. One of the problems with personal property, even if you have a business, not necessarily a retail business, but some other kind of commercial business, that won't tell the tax assessor what they have for personal properties and won't let them in the facility to see what they have. Most towns, as far as my experience is, most towns give up because in most cases, the dollar amount is so small that it's not worth going to court. So they just say, screw it, we're not going to bother. And certainly needs some work, but probably not by us.
Yeah.
Mr. Hoskins?
Yeah, this is mostly going to confirm what Representative Nutting has just said. But I just pulled up the personal property as a share of the total property tax base. Statewide is 2.2%. There'll be variation across municipalities, of course, and I sort of can't do that on the fly because I might hit some typos and things. But at the county aggregation level, that ranges from 0.7% through to 7.5%. So personal property is a fairly small percentage of the total tax base.
And just to clarify, that includes both residential and commercial personal property tax in that number?
I'm not entirely clear on whether this is taking data from the MVR. I'm not entirely clear on how property under Betty and Better falls into this. I suspect the answer to your question is yes.
My guess is yes, but
Yeah.
seems like it. Okay, I think Mr. Leishman, you were next. Or it may have passed. It's okay. Mr. Peters?
Just to clarify, sorry to keep going. So the Better and Betty is related to the personal property stuff. Okay. And then I just wanted, I think you mentioned it before, Senators. I just want to echo that I think we should elevate the setting up the regular review cycles for the tax exempt, and to echo what Representative Nutting said, maybe we just don't have any other further recommendation other than that that they should be reviewed to make sure they're meeting their public purpose.
Do folks feel like that resonates with you? And then also, does it make sense? I think the universe that I was thinking about was your current use, so tree growth, open space, farmland, and working waterfront. Then you've got your tax exempt properties, and those come in different flavors or reasons that they're tax exempt, and then the personal property tax exemptions. And those would all be the different items that would get on a cyclical review. Any thoughts about that, Mr. Leishman?
Well, I would add to that, if we eliminated personal property, that would be tax relief to residents.
Yeah.
And if we set a bar, say the $10,000 that Senator Bigford said, we put a bar there, then we would be eliminating personal property for a lot of very small businesses. So in those two ways, we would be providing some significant, maybe not significant, but real tax relief. And let me throw one more thing out there as far as assessing staffs go. The assessor in Auburn told me they spend 30% of their time on personal property for 10% of their revenues.
Interesting. Okay. Other comments on that? I sort of just lumped a bunch of proposals into this bigger thing. Folks feel like they want to add to that. Ms. Billings.
Can you remind me the pilot section is highlighted on it? Is this because we're going to take a look at it a little bit more on the exempt property? To figure out maybe if there's a little bit more of a robust reimbursement formula? I can kind of, speak to some of the observations that I've seen is, some nonprofits either have buildings or whatever it is, don't necessarily get money for the bricks and mortar to keep up with it at times. Some do, some don't, depends on the donor pool. Donor pools, in most areas seem to be shrinking, so I don't know how they're really looking at that. But the other ones that have lands that's going into conservation, that seems to be increasing, but the only thing is, it's a challenge for towns now because, whether it's for us, like with water and sewer, roads are getting beat down, and also too, there seems to be a lot of effort into acquiring more, but taking care of those lands properly, that trails aren't beaten down, beaches aren't overused, and parking on roads rather than the area, not pushing on. We are seeing some capacity, issues and fields not being taken care of, and it's something I see is just starting to increase. And, along with those, it still comes with an attraction with, non-residents coming here. I mean, which I don't have a problem with, but it's a seasonality, and it's, looking at that versus year round. But a lot of these costs are borne by the local taxpayers, in some way, and recapturing some of that, would be nice in some ways, rather than just off the tax rolls and a burden to us in some ways.
Ms. Billings, to clarify, regarding the payment in lieu of taxes, was there a specific comment in here that you were reflecting on? Just as I see it in a couple
The
places.
last bullet in the center exempt property column.
Right, but
Says
there's
members.
another one.
I guess for me, to just generalize, it's not enough money. If you have something that's a, $300,000 parcel or something, and you're getting a check for $387, it's, I don't know, doesn't even feel worth cashing sometimes.
Gotcha. So that kind of goes with that, as you were saying, Rachel, that third bullet there about from Ms. Lear about if there is going to be some kind of solution about pilots, maybe not saying every tax exempt property is paying a pilot, but the ones that are the heavy hitters are now being required to, if you will. I was just clarifying because we had made a proposal around just even understanding how much of this is happening because nobody's tracking that data, I don't think.
So there are some additional recommendations related to pilots under the municipal
Gotcha.
purple
Oh,
Okay.
document.
Okay.
This is here because it's specifically about exempt property, which is an already existing program. And in this case, it was about MRS tracking the operation of a current program, which is why it's on the buff page. But pilots themselves, there are some suggestions about municipalities being able to have pilots or additional pilots, or to tailor the pilots to their municipality's needs. Those appear on the purple sheet.
Okay. So is it general interest in pilots from folks? Not opposition maybe, but. Dr. Allen.
So I don't see it in this section, maybe it's in another, but I know we had on our list municipal service charges, which I sort of think of as in the same area as pilots.
Yeah, those are on the purple page.
So yeah, maybe we can revisit that.
Obviously, we made some choices about which categories to put in, and we are not experts, so we could have miscategorized things. The experts.
If they're showing up in more than one place, I think that makes sense because this is all interconnected.
If you don't mind, do you mind if I summarize what we've kind of heard
Yeah.
so far?
Great.
Benefit of staff as well as you all. So it sounds like there's an interest from the task force to elevate a recommendation related to review of current use programs. So maybe some level of review, maybe it's one overall review of policy. Are you achieving that? Kind of a one-time look to make changes, or to institute more regular review cycles of those programs. There are a couple of different legislative ways you could tackle that. Also to review exempt property. The type of review that you may propose for current use programs might not be the best way to also review exempt property, but it might be. So kind of looking at what's the goal of reviewing those and what might be the best method for proposing those types of reviews. And then I was less clear on whether you were intent on also reviewing whether one time or on a regular basis, personal property tax changes. Comments made by members just momentarily ago indicated that there was some greater interest in what the tax committee had already proposed, but didn't make it off appropriations. You can recommend that the legislature renew their consideration of a previous piece of legislation in a new form, So that's another way you could move forward with personal property. As well, you may not need to spend a lot of time as a task force discussing it if you think the taxation committee's previous work is something that you can lean on. So that's from this. I think there is interest in further discussion of pilots, which you can have as we move into the sort of municipal side of things. Are there other things that you think you highlighted that I have not reviewed from this conversation, from this most immediate conversation?
Mr. Caliendo?
You have the recap of the pre-lunch summary interest.
Less clear. I don't think you want me to try to do that on mic right now, but we have extensive notes on that. Yes.
Okay.
Other things on the buff pages, Mr. Peters and then Mr. Leishman.
Just quickly, I wanted to correct a typo on a comment that I have in here. It's under current use, it says require 12 months of main residency. It was just require main residency, not 12 months of it.
Okay, so that fourth bullet, your recommendation was require that you be a main resident in order to qualify for the current, like similar to the homestead exemption. Gotcha. Okay. Thank you for clarifying. Mr. Peters.
I was just on the third page of the buff sheet. I think education awareness is huge. And so when municipal officials get questions, I think from residents, even if there was like a great central other spot that they could go to get information, I think that'd be great. And then continuing to encourage the desire for municipalities to have home rule, which we heard about earlier this morning, that it is totally within their purview and capacity to offer local tax assistance programs. And I know a lot of municipalities do, and so I just think reminding municipalities that there are options there if local residents are having a hard time with their property taxes, that, I don't know, there might be options there.
How do members feel about those recommendations? Are you also interested in those?
Yes.
Seeing some head nods. Anyone very opposed? Too bad. No, I'm just kidding. Okay, so it sounds like those are interested, there's interest in having those go on the carry forward list. Dr. Allen?
So on the personal property tax, are we keeping that sort of as an ongoing issue to consider and talk about?
I guess what it sounds like, folks are interested in it, not sure if it meets the same type of review as some of the others, but I would keep it on I think we would want to keep it on a list to figure out, to Rachel, your question of what is the goal of reviewing, then we can figure out what should the structure of the review look like. So I think to me, it seems worth asking that question of those personal property tax programs and then deciding. Senator Bickford?
Yeah, just a question. When we're talking about personal property tax, are we talking about the residential personal property or are we talking about the business personal property?
Yes.
Yeah.
Dr. Allen?
Following up on that answer.
We can decide.
Yeah, the only reason I'm bringing it up is because of LD, was it 1506 that the committee voted
Yeah.
out? And I know I had committee members talking to me near the end of the session because talking about the fiscal note and trying to get it off the table, but there is an attorney general's opinion dated December 29th, 2005, based on the legislature interested in knowing if they were to eliminate the tax on personal property, both business and residential, was there a 50% reimbursement requirement? And it's fairly extensive, but I'm just, and Peter, I think is online now and he can do a much better job on the legal aspects. But I was just thinking that if this is something that the legislature is probably going to pursue again in the upcoming session, this is one of those issues where maybe you need the attorneys from MRS, from the Attorney General's office to come in and just explain, well, if the legislature does it this way, or if they do it another way, what sort of impact that would have as far as reimbursement to municipalities and all that sort of stuff.
Senator Bickford?
Thank you. Yeah, my question with that is, I can't imagine a scenario where any municipality would even know the value of the personal property that they're seeking the 50% reimbursement from. Are they gonna go to everybody's house and look in their garage and see what they own? I mean, you know, they don't now, why would they then? I guess is my question. It's just, that's a rhetorical question, I think.
Well, I think we could put that, because of one of the requirements and our duties here is to consider legal questions as they arise. I think we would just make a note that if we continue to want to look at personal property tax or make specific recommendations, that we're gonna need to get a little bit of that legal clarification to be able to make a appropriate recommendation. Mr. Leishman?
I have a question for Dr. Allen. Do you have any idea how many municipalities go for residential personal property?
No, we've asked that question,
All right.
MMA and others, and
I mean-
we don't, we just know we hear like you, that there are some that do that, and
Yeah, but would you, I mean, I think that there's so few that if we eliminated that check that the state had to write for the 50% would be pretty small. Save a lot of people. I mean, because Senator Bickford's right. We can't, even if we wanted to, we can't go into a garage to check out the lawnmowers and that we don't have the authority to do that. So it's like being in charge of a program you can't possibly execute.
Rachel.
Because sometimes in our role, we say things that the community doesn't want to hear. I'll just remind the task force that your duties involve real estate property taxes.
Oh, yeah.
And not specific to personal property taxes. That doesn't mean that you are bound by that. There, as legislators on the task force will know. But in terms of trying to perhaps narrow your scope, we have you have examined personal property and business property in your as you work to gain understanding of the general property tax system in the state. But the task force duties are specific to real estate property taxes. So to the extent you can do with that information what you would like, but I wanted to flag that for you as you approach the conversations that you want to have about real estate property tax and the limited time frame that you have to conduct your work.
Yep.
I mean, it's all convoluted because it's like municipalities getting like excise taxes come up because that's one of the only other places municipalities can get revenue. So not, but point taken, that can be on the, if we have extra time list.
So to summarize, I think she said, stay in your lane.
Stay in your lane.
Yes.
Let the tax committee deal with that problem. Okay. Anything else on the buff sheet that folks are really keen on before we move to our next study hall? Okay, seeing none, it's not a last call per se, but we are trying to refine this list to have the conversation with the tax committee. So certainly if things were missed, they could come back up at that meeting, but we're going to have a refined list for that conversation on the 30th. Okay, next is blue, I think, property tax assessment processes. Is that seem right for everybody? All right, take a couple minutes to review this. See what you're excited about. Well, then we'll check in. Okay, looks like folks are wrapping up. Any top hits? Mr. Peters?
Of all the data that I feel like Steve and his team presented, the failure of the assessment process through COVID, I think was the most apparent kind of lack of opportunity for improvement. So I think we, as we go through this and have our recommendations, I think we do need to think about how do we limit that from happening again in 30 years, when the next surprise comes or whatever. So I do think that either requiring evaluations more frequently, or if we leave it at 10 years, that the state can come in and do the revaluation for the municipality if it's not being done, and, pay for it out of reducing municipal sharing. And I just feel like there's got to be something that incentivizes municipalities to stay on top of it, because this is why we're having the surprises of like, well, my property last year was worth 100,000 and now it's worth 300. That's why we're here. And so how do we kind of fix that?
Thank you. I think to sort of put a finer point on that, I think most things in this column about determining the assessed value should probably be moved forward because they're all related to that, or different ways of saying that we need to improve our practices there, whether it be incentives or incentives that lead to penalties or those sort of things. I think we can figure out, but at least on this first page, they're all, I think, related to that comment. Mr. Caliendo?
In column 1, the information communication bullets 3 and 5 are really related. I had an interesting education on the process because the town did not do an assessment for like 20 plus years. And what got explained to me after we had a realtor and we paid to have a real estate appraisal done to contest and appeal it was, if they're only going to do it 20 years, they're projecting where the value might be at the midpoint. Now, whether that's true, false, I can't, that's what was explained to me. So agree with you that the second column all being related, there has to be a solution, because if you do more frequent, valuations, well, and you go market rate with comps, you're kind of done if there's an effective way to do that. But if there's going to be this 10 and 20 year and 30 year waiting period, and if what I was told was actually true, that's an educational moment for sure. That would make sense for consideration.
Representative Matlack and then Senator Bickford.
Thank you, Madam Chair. One thing that caught my eye, and it probably caught Mr. Leichman's eye, in errors and appeals. The last item, it says, if a property taxpayer files an appeal of their assessed value, an assessor should be required to visit the property in person. The last part of that sentence should probably go away if the property taxpayer allows it. So, yeah, I think no. And then on the other side, just because I spent quality time in state and local government, and we did a discontinued roads project. This is an interesting way to solve a problem that's been around for quite a while. Consider reducing assessed value of property that has limited roadway access, or providing tax credits to property owners who provide maintenance on abandoned and discontinued roads that are considered public access easements. That may be one way to solve a problem that's been sitting around for a long, long time. Yeah.
Specific, is there a specific one of those that you're referring to when you say one way? I think there's two options there providing it.
For this last one?
Yeah.
No, the idea of abandoned or discontinued roadways. So it's not
Well, what it's saying is
I'm not sure it's an either or, and this is a single
From
sentence to
Roberta
summarize
Manta.
Sure,
a
sure.
longer proposal, which is actually in your packets from,
Mhm.
this was just received in advance of this meeting. So I don't think it's an either or. I think you could do both. Like and it's sort of, there's more in the written comment.
Thank you.
Okay, thank you.
Senator Bickford and then Mr. Leishman.
Thank you. Under information and communications, the last bullet, 5. It says assessors should be required to provide specific data on how they determine the assessed value, including comparable sales reports. I would like to add, if requested. I mean, if somebody doesn't ask, why should they go through all? I mean, can you imagine the tens of thousands of dollars you're gonna add to the cost of assessors if they have to do that for every property?
So Senator Bickford, just to clarify, this was a recommendation from the public. Do you support the recommendation if it's changed to say if requested?
Yes,
Okay. So you're interested in the recommendation?
yes,
with the
absolutely.
tweak. Okay.
But we gotta remember, and Mr. Leachman can probably help me with this, there's a difference between an assessed value and an appraised value. Am I correct?
Mr. Leishman.
There actually shouldn't be.
Oh,
There often is, but there shouldn't be.
Okay.
We're all trying to say what is market value. And-
Okay.
But it's an art, not a science. So there can be differing opinions.
All right, thank you.
Yeah.
Mr. Leishman, you were next with a,
Oh, yes, I did. So on that fifth point, I totally agree with Senator Bickford. It could get expensive, but that is typically what we do. If somebody comes in and challenges their
if requested.
assessment,
Yeah.
then that's what we do. We go through it. How did we come up with your value? And we show it.
Yeah.
Now, because it's mass appraisal, we're not having to do an independent appraisal of a property. Most of us aren't appraisers and couldn't do that anyway. But we have assessment tools that, somebody comes in and I just pull out my folder of all my studies and I just show them how we got there. So anyway, that's pretty typical stuff. The number 4 before that about including the record card with tax bills is impractical. We wouldn't be able to stuff those envelopes. They're done at a mail house and it just could not be done.
just to clarify on that, if a person wished to have the property tax card and it wasn't online, they could go to their municipal office and request it, I assume?
Every municipality, just about every municipality has it up. And if not, again, they can request it and we would send it to them. It's
They
pretty
could, yeah.
pretty routine.
Representative Nutting.
Thank you, Madam Chair. I think we probably all agree that the more often assessments, property tax assessments are done, better off for the state, better off for the taxpayer, everybody's better off. But when we're looking to get communities to do them in a more timely manner, we've got the carrot and the stick, and I would hope that we would use more carrot than stick, because there are for a lot of reasons why assessments are not done more frequently, and to possibly penalize communities for not doing them as we wish they would do them. There must be a carrot we could use, maybe to help them find assessors or help fund through grants part of the assessment or something. Anyway, carrots better than sticks.
Thank you. Tastier too.
Yeah.
Mr. Leishman.
Thank you. Just very quickly, I think the answer to that question is why they're not done is because they're expensive. And it's not the assessor making the decision to do a revaluation. It's the town council or the select board. They've got to raise the money. And it's expensive for a reasonably mid-sized town, or actually in the reports called it a small city of 3,500. that revaluation is going to cost $300,000. And it's just a lot of money to do all that often. And then secondly is there aren't a lot of companies out there providing that service. So you've got those two things going against you.
Quick question, follow-up. Does it cost any less if you're doing it more frequently because things are a little less out of whack?
Yes, in this manner, you don't have to do a full-blown revaluation where you go around to every property all that often. So you can do what's called a statistical update, where you're not visiting, you're just doing the math. And that typically costs a lot less.
Senator Bickford?
Thank you. Mr. Leachman, I want to follow up with that. Wouldn't it be cheaper, especially in the smaller communities, like say less than 15,000 people, to have it done by the county and just do it countywide every 3 or 5 years?
I think so. I mean, it sounds like it should be.
So,
Representative Matlack?
I'm sorry. Municipalities with fewer than 15,000 residents is every community except for the top 10 largest communities.
yeah.
The cutoff is about there. So
Right.
every other town except for the few top tiers.
Yeah, and that's my question.
But to finish answering your question, I once tried to price it out of putting 2 or 3 towns together. And the reval company said to me, we still have to do the same amount of work, even if we had you as 3 individuals. We have to go to each property. We have to do the data entry. We have to hold the hearings. So that, and we have to put it in 3, if it was 3 towns, 3 different systems. So there really isn't a savings by doing it that way.
Senator Bickford and then Dr. Allen.
So just to follow up, this sounds like we're getting back to that question I think we talked about in other meetings about regionalizing the assessing, having it done by county, where that way you're not answering to each town council, you're just answering to the county, except for Representative Matlack brought up, maybe the top service center communities that, you know, are probably a lot tougher to do than a town of 10,000, 15,000 people.
I would agree with that. Yeah, okay.
Sorry.
That's okay. I'm starting to lean toward there should be a subcommittee of people that really want to wonk out on what's going on with assessments. Just throwing that out there. We don't have to decide that's what we want to do, but I would volunteer to be on it. Just saying. Mr. Woodbury. Oh, sorry, Dr. Allen, you were next. I got to make my list over here.
So just staying on this topic, under determining assessed value, the last bullet, is that sort of getting at Representative Nutting was saying of sort of the state trying to incentivize some way, maybe subsidizing regionalization as a way of, I'm just trying to understand what that
You're on the last bullet
bullet.
on the page 1?
Yes, I
Yep.
was just trying to, because it says rather than pushing regionalization, so. But it seems like it's provide regional and statewide support, so I guess it's.
That comes from PPI's recommendations, and you can see their excerpt from the report in your packet on page somewhere in the middle. Page 34. This was PPI's second recommendation, regional support, not regionalization. Stephen is still present. I could maybe speak more to that, but there's the blurb from the report is in full on page 34 of your packet.
Mr. Caliendo.
I wanted to agree with Mr. Leichman on the revaluations and your subcommittee is that having been through valuation of 50-year assets in a large scale, the first one is painful. But if you update it every few years, it's really fast. And you don't have to necessarily get into the complexities of I haven't done it for 20 years. And when I say really fast, about, half the time, a third of the time, but it is worth a look at whatever the recommendations are, because that's personal experience in complex values.
Mr. Woodbury.
Thank you, Madam Chair. It seems like Maine Revenue Services must do some kind of statistical thing every year when it does the certification ratio. So I'd just be interested in kind of, if there's an opportunity in syncing a little bit those two processes.
Yeah. I assume if Peter is online, he would hopefully let us know that. He is online?
It's online.
Okay.
It's raised his hand. You just need to turn on his camera.
Oh, okay. See, I can't see the raised hands.
Oh, there it is.
There's Peter.
Hey.
Hi.
Hello. So,
Introduce
thank you, Madam
yourself
Chair.
first. This is your
Yes,
first appearance today.
Yeah, good.
yes, I'm Peter Lacy. I'm the Director of Property Tax at Maine Revenue Services. So the question, I guess, regarding state valuation. So we do that every year, and all that is intended to do is to basically take the town's taxable valuation and scale it up to 100%, which is not necessarily as the same thing as doing a reval, because we're doing it in aggregate. We're not doing it kind of property by property. We're just looking at kind of their total taxable values. So ours is just a single aggregate number for the year versus a reval where they're looking at schedules and individual properties. So
Senator Bickford has got a question for you.
certainly.
Mr. Lacy, you just brought up something that brings some question to me, and that is, how do you determine at the state level what percentage of reval or valuation in a certain municipality is by, I mean, I'm curious. I mean, you don't stick your finger in the air.
So
It's gonna
we
be a
use
process.
Yeah, so we use what are called sales ratio studies, where we'll look at the sales that have taken place in that town over a period of a year, 18 months, depending on how many sales are available, and compare that to the assessed values of those same properties. And so you look at that, and then you'll get a sense of what the ratio is for the town that the town's using to assess their properties at. So, so that's mostly what we're doing is we're looking at a big kind of lump of sales that have taken place and looking at how those compare to the assessed values that the assessor is putting on the properties.
So if municipalities did that every year, it would be pretty simple and pretty inexpensive to keep up with assessments, wouldn't it?
Well, and a lot of municipal assessors are doing sales ratio studies every year. That's something that we request from them and that they see as part of the state valuation because a lot of times we have to look at actual third party transactions, right? We don't want to look at you selling something to your son or things like that. So the assessors are the ones who know their properties better than we do, and so they'll go through and they'll look and say, okay, like we know this is a bankruptcy transaction, or we know this is a cousin selling his cousin something or something. So we get information from the assessors and use those to go into the ratio studies to come up with the ratios. So
Thank you.
so it's a team
I
effort.
think somebody should make a great video about how this all works, and then we can show our constituents the video. I'm not volunteering to do that. It's not a skill I have. Mr. Leishman.
Thank you. Peter, would it be impractical to think that Maine Revenue could provide training for assessors to do their own statistical updates?
No, I mean that definitely could be something we do moderately through the turnaround docs, but yeah, I mean I think it would be it would be helpful to have the assessors comfortable with doing a lot of these on their own as well. So they can get a sense of where their municipality is moving. Absolutely.
Okay, thanks.
Okay. Mr. Woodbury.
Thank you. It's kind of like there's two things going on here. There's the overall appreciation that gets identified by a very simple process like the certification ratio. And there's the change in relative values that leads, something has been under assessed or over assessed or whatever. And the frequency with which you need each of those things is a different thing. We might like to have the general overall thing rise on a more frequent basis to reflect overall changes in the landscape, but we may not need to do as frequently how do you look at the relative value between one property and another? If you follow what I'm saying.
I do. I think we need to do it more frequently than every 40 years, though.
Yeah.
But I think there's consensus on that from all of our conversations. But yes, I do absolutely understand. Dr. Allen.
This has been an interesting conversation, but I would just bring up too that any decision that the task force makes, the legislature going forward, I mean, we have lived through a relatively unique time. And so we shouldn't let that necessarily drive, a ongoing or long-term decision about the frequency of doing these types of big revals. That's all. I mean, I don't know if we'll ever see, at least in my lifetime, what we just saw over the last 6 years where, that was highly unusual, I would say. Not that there haven't been other periods where housing prices have escalated, but I don't remember them escalating that quickly, that fast, and for a completely unique situation.
Mr. Lacy, have your hand up.
Thank you. Yeah, I wanted to kind of follow up with what Mr. Woodbury was saying, which is that I think and Carrie talked about it a little bit too, is that there's this idea of a reval where you're going into every, looking at every building, looking at every parcel and trying to figure that out. And that may or may not be necessary on as regular a frequency, right? So if you're a municipality that is very homogeneous, right? So it's exclusively made up of all 3-bedroom, 2-bath houses. You might not need to do a reval on as regular basis if all the properties are the same. Whereas if you have a lot of heterogeneity in your thing and there's, a bunch of mobile home parks and a bunch of waterfront and a bunch of non-waterfront, and that's where you're going to really get the most kind of bang for your buck with a reval, because you are getting properties in the town that are either appreciating or depreciating at much different rates than the other properties. And that's really where you need the reval to take place. If everything's appreciating the same way and roughly the same method, then a reval isn't necessarily going to be something that is required. You could do, like Carrie talked about, some type of factoring where you're just moving everybody up at roughly the same rate. So
Sounds like we have a lot of people who have not yet volunteered themselves for the subcommittee, but are very interested in it. Ms. Billings.
One of the interesting things out of this last, I don't know, to me, it's more like 10 years or so, is that what changed also too, especially for the coastal areas, was, in the 80s and 90s, we had a lot of multi-million houses, built. And then there was this transition was they were just buying houses, doing extensive, expensive remodeling. So we are not able to add, to add to our tax base. Before we could do that, before it wasn't so painful for school costs and everything else, because you had a bigger base to do it with. We no longer have that. They're not building because building costs more to be able to do and stuff. So there was a big shift on that one that we're not able to kind of spread it out over it. So the impacts are more sharper the other way. And when you look at, assessing the house or appraising or whatever it is, it's not the same as a big house sprawled all over the place. So that changed a lot, in my opinion.
Just talking a little bit about the unique geology of Stonington and Deer Isle to Center Bickford, and that exacerbates things. Yes.
Yes.
All right, members, we've gone through a lot of conversation with the blue sheet. I don't know, Rachel, if you want to try to summarize it or not.
Sure. So
It was not it was not a trap question.
they never are. It does sound like there is an interest, whether that's through a subcommittee or not, to more closely examine the reevaluation process, looking at both maybe requiring more frequent reevaluations or sticking with our sort of 10-year plan, but thinking about carrots and sticks for municipalities, and then also examining the relationship between the statewide valuation process and also statistical updates that municipalities could do those more frequently to prevent sort of the drastic changes that we might see in municipalities that perhaps took longer than 10 years. So that's really sort of as was mentioned, those first 6 bullets in the determining assessed value, we're all kind of connected to that. So exploring that further. There was also interest in considering proposals linked to property taxpayers who reside on discontinued or abandoned roadways. Said that backwards, they go the other way. And then there was also interest in a recommendation about better communication about how assessments, what the data behind an assessment is for taxpayers. So whether assessors are going to be required to share specific information and when. So kind of looking at that and what the parameters are. So that was one other area of interest, which I think in some ways connects to the appeals process, but that was also flagged as just requiring an assessor to physically visit the property if the property taxpayer has appealed their assessed value. So those were what I had flagged. And there was also not in the chart, but there was a question about MRS doing some additional training on the statistical update process. That would sort of be almost like a new recommendation that's not on the chart for you to consider. MRS is an agency for which the legislature can direct action. So that can be included in a piece of legislation. I think that is what I have. If I missed something, if something I didn't flag an element that you had an interest in.
Mr. Peters.
Thank you. I think it is not as present in what we've talked about so far around, kind of echoes what Representative Nutting was saying, that we need to engage and make sure that the municipalities are solicited for their kind of, how do they feel like they could have the assessment process work better, and while also acknowledging that, why was it that it's been 30 years, just to learn a little bit more. I feel like that will help the legislative process. So just highlighting that engagement with municipalities before saying what shall happen.
We're doing a total
Yeah.
overhaul. Yeah. That's probably would be appreciated. And we can't just put it all on the backs of Bangor, Stonington, and Camden to give us that feedback. Any other sort of clarifications or comments to the summary that Rachel gave us? Mr. Leishman.
Just another comment. Under errors and appeals, we already do all of that. That's not new stuff. On the first bullet item, taxpayers have 185 days to file for an abatement if they find an error on their assessment. And the reason it's limited to 185 days is because at some point, the municipality has to know that the revenue it's counting on is going to come in. So it's a 6-month period. And then the second thing, if they file for an appeal of their value, my standard letter goes out and it says, I'd like to visit your property. As Representative Matlack was referring to earlier, they don't always cooperate. And we're planning on introducing some legislation that would require that. I had a situation, and I'll tell it very briefly, where the taxpayer filed for an abatement, wouldn't let me on his property to begin with, wouldn't let me on the property for the abatement. I didn't grant the abatement, and he filed an appeal. Strangely enough, I lost the appeal. So I had to go to Superior Court where it cost the town $15,000 to tell the Board of Assessment Review that they were wrong, I was right, and couldn't do it. So that guy's filing again this year. And so it would be nice to have some kind of legislation that says if you're going to file for an appeal, you have to let the assessor in. I mean, how else can I look at what the value is? Anyway, so yeah.
Okay.
And the
Well,
sad part about it is that Board of Assessment Review had assessors on it. I mean, yeah, it was terrible.
Okay, so you're not proposing we elevate those bullets because you feel that is part of the system,
It's already in the system.
and then you have a different avenue you're looking at for the deal with this difficult situation you were facing. Right. Okay. All right. Okay, the blue sheet. Aside, purple. See how we do. Municipal, non-school and county level proposals in here. Anything we should know before we take a quick look?
Probably I just note that some of these, I think there isn't a little overlap with the first two buff and blue pages, as they might relate. So you might see a little overlap or that they dovetail with one another, not necessarily overlap. And you have sort of the municipal elements, municipal spending, consolidation, and sort of the powers of the municipality to bring in other revenue. And then on page 3, this is more about how the state's responsibility to municipalities, either through reimbursement or a responsibility that the state has to cover certain costs, maybe not necessarily through reimbursement, but through a state fund or grant program or something like that. So I guess it's a really broad category for municipality and county, probably geared more towards municipalities than county, but and then really broken into the sort of two chunks about sort of things at a municipal level. So things municipalities could do more directly versus the second level about state responsibilities to the municipality.
Okay. You know the drill, take a couple minutes. Thank you. Okay, I'm gonna propose we start the discussion. Hopefully everyone has looked at most or all of the document. Anything people are excited about? Mr. Peters, kick us off.
I am excited about reevaluating the Constitution to allow municipalities to have other ways of generating revenue than property taxes. There's a lot of anecdotes out there around cruise ships or hotels or other use taxes that are generating more income than just to cover the operations of that specific thing, which is the impact fee limitation. So I think that should be highlighted. There's a lot of municipalities out there that would like to see that as a way to diversify their tax base.
Thank you. Ms. Lear?
Yeah, I think probably there are long-term big solutions to property tax issues as well as short-term solutions that could, effectuate incremental change. And in speaking to my peer service centers, there was sort of unanimous consensus that the revenue sharing formula was a really fruitful place to have discussions about evening out the burden for service centers or municipalities with high proportions of non-taxable property. I believe that was a Grohowski-Matlack suggestion.
Okay, further comments about either of those things or something else? I mean, I would just say to follow on to Mr. Peters' comment, I definitely have communities that are interested in alternative revenue generation opportunities in my district. I'm not sure how everyone will feel about it, but I do think having some clarity around the legal circumstances could be helpful, especially even if this task force doesn't recommend anything, it's going to come up in the next legislature, I guarantee it. So I support the idea of at least having more information to prepare ourselves and to also prepare colleagues in the legislature to be able to answer those questions in January, sort of based on what I'm hearing being talked about. Senator Bickford?
Okay, here we go. I am not and never will be in favor of going after the tourists. That's what Maine's all about. If you don't want tourists, can you imagine what this state would be like without tourists? That's our bread and butter. That's what Maine thrives on. And all I hear all the time is how we want to attack them. We want to charge them more. They shouldn't be here. They shouldn't have seasonal homes. They shouldn't bring ships in and, cruise ships. I can't go along with any of that. Just my personal opinion.
Thank you, Senator Bickford. Ms. Lear, I saw your hand up, but if you're out of the queue, that's okay. Or if you want to be in the queue, I had seen you next.
That was a remaining hand for me.
Okay, residual. Mr. Caliendo and then Representative Nutting.
My thought on that was similar in that not knowing how the revenue sharing formulas work is if local municipalities were given the ability to add local taxes, then it's a reduction of the total sales tax. So there's a direct alignment that municipality holds on to that money instead of it. If it's 5% and the municipality adds 3, well, they keep the 3. There's no sharing. They're keeping the 3. And the other 2% is remitted so that you're not overburdening the tax. It's perhaps more of a direct apportionment to the actual seasonal realities of the benefits. But collecting the reporting information and, bear with some of my ignorance is that Sebago Lake is the responsibility of the town or the state. right? Acadia National Park is the responsibility of the town, the state, or the country, right? So when you go through all this, the expense breakout is obviously the complicated part, but the revenue breakout I found to be just as interesting because I haven't yet connected the dots that this revenue sharing that's coming in is for which portion of the expenses. And I think that answering those questions and elevating the reporting collection, it's a long term, it's not something that can be done in 2 months. But that brings real elevation, understanding about, well, okay, this is what it is. Because I don't see in the little bit I did really egregious spending increases in the handful of towns that I just pulled. I was like, okay, middle of the road. It's, overall, it's middle of the road. So I'll leave it there.
Yeah.
So,
Representative Nutting was next in the queue.
Yeah.
Thank you, Madam Chair. Once I've been here for 20 years and speaking as a partisan Republican, I don't think it matters whether this task force suggests that additional taxes are in order, whether they be local taxes or any type of additional tax done by municipalities is going to face the constitutional question. And the way the makeup of the state is right now, it will never pass. I guarantee it. And part of the reason why some of us believe that let's say a local sales tax, you take a 5.5% state sales tax. If you allowed the city of XYZ to add a 1% sales tax, they would simply, in my opinion and many others, they would take that 1% and they would buy new stuff with it. They would buy new services. They would hire new people. And the 5.5% tax you would still have, and your local property tax would not decrease at all. It would just get sucked up into the pot. And for that reason, I don't think the chances of it coming to fruition, as attractive as it sounds to some communities, is in the realm of possibility.
Senator Bickford and then Mr. Peters.
Thank you. Yeah, Mr. Caliendo, I appreciate what you're saying. Now, you can't, right now, a lot of opinions are that the Constitution says that the power of taxation rests solely with the state. We can't, what's the word I'm looking for? We can't delegate that authority to anybody else. So we could, as a state, we could say, okay, we have a 5.5% sales tax. We're gonna move that to 6.5%. 1% will stay in every single municipality that collects it. That would be, in my opinion, constitutional. I'd never vote for it, but that's what we could do. But the more tourism we get, the more people that come to Maine, municipalities prosper from that already, just because of that influx of people. So, I would hate, I like to go camping with my wife. If I go to Fog Brook next week, I don't want to be paying extra money because I'm a tourist. I live in Maine. So, that's just my opinion, but I do agree with doing some studies and understanding. We have municipalities that are at 90% assessing that are paying a mill rate of 12. And they're complaining when you go to service centers, some of the service centers are a 23 mill rate and they're still at 70 or 80%. So it's really apples and oranges, in my opinion. We got two totally different mains in some instances. Can I get down off my soapbox now?
You're welcome to anytime you like, Senator. Other topics folks want to highlight from this compilation? Mr. Peters.
I think I want to highlight figuring out what the state can do to help municipalities cooperate on services that not necessarily saying you need to regionalize or consolidate this, but like how do you kind of encourage and cultivate and develop relationships around just lowering barriers so it is easier to work together? I think that's just something that would help with managing municipal costs or we talked about not being able to hire people, because we need 2 animal control officers for 2 towns, but what if we just had 1? Or I don't know. And I know that happens, but it's how do you kind of continue to develop that more? And then I do want to say one more thing. I know but my apologies. I do think that, so I know Bar Harbor limited the number of cruise ships that came because they couldn't maybe tax it higher to reduce demand, right? And so it's limiting with regulation rather than using a market system that could have the same output with more revenue for the municipality. So I just think it's more complicated than just saying raising taxes and reducing taxes. It's really about how do we have all the tools at our disposal to achieve the outcomes of successful tourism and also not reaching a Barcelona level while also being able to kind of raise funds appropriately. So thank you. Sorry.
It's okay. I have like a request for more information. There's a bullet point under municipal spending about audits. And I'm just curious to have a quick overview, maybe at a future meeting or something, about what are the actual requirements for the state and by the state for the counties and the municipalities. Just because I'm not sure, we've got this comment about these consistent audits, but I'm really not sure what the requirement is versus what the regular practice is. And certainly being adjacent to Washington County, and seeing what happened there. I know there's a lot of interest in my region around, like, let's make sure that doesn't happen to us, kind of thing. So I have an interest in that, but I don't know if it's an actionable item because I don't really actually know what the lay of the land is. Representative Nutting.
2 things. I think that's an excellent idea. And I was shocked to find out that like Washington County and towns don't all do some kind of an audit at all for years. I mean, I think there's a law, but I'm not sure that anybody cares. And I think that's scary that they don't. So I think we should encourage or do what we can to get them audited. As far as working collaboratively or incentivizing municipalities to work together, I think that's a wonderful idea. I think you'll find that municipality is very parochial, and the fact that I have my fire chief and you have your fire chief doesn't mean we can let one of them go and let one guy. It's very hard to do, but it's a worthwhile effort, particularly with emergency management, which is a big problem in rural Maine. So I think consolidating is a great idea. The lack of auditing is scary to me.
Ms. Billings and then Mr. Caliendo.
just to put some perspective on this, I know that, everyone seems to think that, we're hog wild doing all the stuff that we do, but in reality, we're just hauling trash and we're just doing motor vehicle stuff and, and public works is clearing your ditch and animal controls, getting your friggin' dog that's been on the loose for 57 days straight and everything. And, but, we try to do the best we can do, but just, I'm not at the $2 million mark now for hours, but if you just take that at a flat 2 million for the town, 3% is $60,000. You can't buy much with that anymore. You just can't. Those days are gone. And, the other, item I would just like to, reflect on also too is that, it is a struggle to try to balance this out, work with the state and stuff. And also too, like with the audits, I have to do an audit because, where I'm just stuck with, and a lot of coastal communities are trying to baby along the water and the sewer system to comply with, the federal water mandates, Clean Water Act and stuff. So I have to do, a fairly robust audit, two of them, because the sanitary district's on a different one. And they are costing more because the federal government is asking us to just list down every stinking asset that we've got, including the pencils on the desk, it seems like too. And so that is getting daunting, and there's not as many audits around. They're suffering the same thing as the rest of us. A lot of them are aging out and not a lot of them going in. Maybe, there can be some sort of thing with, maybe AI simplifies some of that at some point. We're not really there yet. But, we do have an audit every year and lays out everything, Benny, that I've been spending my money and my little savings and everything else. And, but that's the reality, what we face, so.
Mr. Caliendo?
So the audits resonated simply because we're not talking about a budget proposal. We're not debating about what this will change by. It's just what actually happened. And I saw in the audit reports, at least for the current year, there was always a comparison of the actual to the budget. And there was plenty of pros to those that are interested in reading all that, but it was a standard that will be helpful. So the consistency in those standards is I did have a 15-minute call with one audit firm that does a lot of municipalities, and just to make sure I understood what's the accounting standard for this. Got it. Okay. Now I know what I'm reading. So that sort of education might be, if it pleases the Senate chair, that if you need more guest speakers, that might be something to put on the docket for that. I'll leave that, or parking lot, take it out of scope. That's okay. But I do have a question on the third column. I think this is a good question for the ignorant here about the jail costs similar to the parks. Are the local municipalities overburdened similar to the other service centers in the communities? Some unfair share that needs to be reviewed in terms of their local property tax. It was the heart of a question, is the revenue sharing coming in? Well, is it going to these common service centers, and at what rate? And is the rate of that sharing changing faster or slower than the rate of the property tax relative to the expense of that common service? That answers a lot of questions. I'm really not in favor in any way about these caps, any kind of caps on spending, because if fuel goes up like it has and is the only choice, if I was on a municipality, your street's not getting plowed. I don't know what to tell you. I have no money, because the tourism, I'll remind you, Native Maine is a produce and restaurant food distributor. Managing a business that doubles from January to June, and August is the busiest month of the year. The challenges of managing those things. So I have no qualms of understanding all of our coastal communities and anywhere where there's fresh water. Hunting season, skiing season is a fly in the room for tourism compared to the summer. The burden of managing that and the costs. I even looked into figuring out, can we build workforce housing just to have seasonal employees. And you can read your own stories about some of the local places that did that on their own. And I know of one in East Booth Bay. I think there was one in Wells that I read about. I don't know what Bar Harbor was doing to try and service that workforce housing need. I know a lot of the inns set aside rooms specifically. That means they don't have rooms to rent out because they're putting up workforce in those rooms to do that. So if you're in the hospitality, stay overnight, you can figure that out. But the burden, but the reward is worth it, right? So that it is a big deal. So that's why I'll come back to the economic, again, it's out of scope for us. But the supporting the businesses that have year-round jobs that are exporting, there was another recommendation of benefiting small Maine-only states, companies. Well, remember, any company that operates in the state employs Maine residents and pays Maine taxes, right? And those people go to the grocery store and spend their money in their local towns. So in terms of, not in favor of, but that would be why they're reporting the questions on these common service centers to understand the revenue sharing rates of change that occur compared to the services provided and the local tax support of those same shared services. Thank you.
You bet. Other topics from the purple sheets that folks want to elevate at this time? Did you have your?
I go after.
Okay, Senator Bickford.
I do like, I don't think we've talked about it yet, is jail funding. Shifting the cost of jails more to the state than we have right now. I think we had a bill this past year that addressed some of that, but this is really hurting communities. It's hurting the counties, which have to pass that cost on to all the municipalities. And it's something I think the state could take a lot more responsibility in.
Representative Matlock.
Yes, thank you, ma'am. The one that I highlighted, and I know we've talked about it occasionally, is the local option sales tax. I keep coming back to that. A lot of municipalities would like to have it because their municipalities are hurt, especially the service center communities, by the influx of people during the day and the mass exodus in the evening. And I think that allowing them to have their own tax would be a benefit to them. I know that there are, so I still don't understand the concept of towns saying, I don't want it. Well, if you don't want it, that's what they have about local option. So there are a lot of municipalities that really, really do want the ability to raise revenue outside of property taxes.
All right, I feel like we've hit a lull. We might be ready to wrap up the purple sheet.
Yeah.
I don't know if you want to do any feedback.
Okay. One's harder for me. Under municipal consolidation of services, I'm not sure any of you sort of latched on to any of the actual bullets. I think the takeaway was an interest in looking at how to make it easier or to incentivize municipalities to consolidate or to share their services, their resources, or their people, which people could be a resource, but to be clear, positions. Does that feel, I got like the general gist of that? Okay. You were more divided on the idea of establishing new sources or increasing existing sources of revenue from part-time residents and tourists specifically, but still divided, but seems there is an interest in exploring local option taxes for municipalities. I flagged because we talked about this from the buff sheet, but I just wanted to note that on page 2 in the third column, considering municipal property tax relief programs and increasing existing programs, that was something you had noted under the buff form, but was on the purple sheet. So. And then I also have looking at restructuring revenue sharing 2 in order to get more relief for specifically service centers as something that was flagged. Getting more information regarding the requirements for municipalities and counties around auditing, and also potentially more information on the reality of that versus the requirements. And that is what I think that's what I have for a summary. Something that I missed. Those were definitely broader topics, not quite as discrete as some of our other ones, but to consider how you might choose to move forward as a task force with some of these ideas. Or
Ms. Billings?
Sorry, I'm stupid today, but with the study that we're doing, it's not only the valuations, but what we are adding to for valuations. I'm wondering how that strikes over a period of time and reflecting in the increase in taxes that we face. Are we kind of like measuring that or thinking about it?
Mr. Callahan, go ahead. I'm not sure if I fully grasped the question.
I believe I understood the question, which was going to be like a phase 3, at least in my own curiosity, because they provided the valuations, and then I've actually downloaded 10 years, which I assume is in Mr. Lacy's purview of what those adjusted valuations were. But until I understood the revenue component, which is easier than the spend, I personally was going to layer them together to try and see exactly that, and ask that question. Did I understand what you were?
Because
Once I know the
Sorry.
rate of change in one, you compare it to the rate of change in the other, and, does it tell us anything?
Because we've had a long period of years, just in my opinion, maybe in our area, that the tax base has been flat. We're not adding to it like it used to. So this is a component in it. I'm not sure we're really measuring this looking at it. So
it's not, you're not saying that the valuations aren't increasing, but that the properties that are being developed that would increase valuations that way, we haven't been looking at.
we haven't
compared
been
to-
looking at it. So what is that?
Yeah, and I think that's so municipal specific, because I look at certain communities that population is growing much faster than the state average and houses are going up like crazy and things like that, but then others
I
are
get a
not.
lot of big houses. I can buy a lot of stuff, but when we don't, I can't buy so much stuff. So that's
Senator
kinda how
Bickford's
it
glad to
works.
hear that, though.
Yeah.
Keep all that stuff under control, Ms. Billings. Okay, purple sheet, we're feeling pretty thoroughly done. So I want to ask task force members, it is a long day and a lot to think about. We can do 1 or 2 more of these sheets. We also can consider an option where staff could help solicit feedback over the internet. Kind of just depends on folks' tolerances. If feel like keep going, or I want to do it on my own, do my homework assignment on my own. Straw poll for keep going.
these ones are short.
That's true. Okay. Folks who are like, I want to leave.
I gotta be somewhere at 5.
Senator Bickford, we can definitely get you out of here by 5.
No, I gotta go home for us.
Especially if everyone, if the soapboxes are stored under the desk. I'm glad you take my sense of humor as what it is. I appreciate that. All right, well, the majority said stick it out. Mr. Hoskins is ready to leave. No, just kidding. Go right ahead with what you'd like to say.
Thank you, Madam Chair. I just wanted to comment that in terms of framing our subsequent work from here, and in order to sort of make ourselves as useful to the task force as possible, it may be useful to think about research questions in a similar way that we framed them in the report. specific research questions that can be pitched to us, budget made room for, and then answered, in time for subsequent meetings. Research questions that will really help to move forward some of these issues that the task force are especially interested in.
Thank you. I think that's a great point. And if any come to mind as we're discussing, please do bring them up, and then we can kind of look at the winnowed down list and dig into that a little more. All right, orange sheet, take a couple minutes. Everyone said it's shorter, so we'll see how we do.
As a reminder, the information on the back and what were 2 columns, this was one proposal. So the public comment was to make all of these changes together. It's extensive.
Okay, I'm seeing that many people are done. Hopefully everyone else is close. Any items bubbling up? What you got? Senator Bickford and then Representative Matlack, sorry. It's like,
Well, I noticed a couple of items here that actually mimic a bill that didn't quite make it out of the legislature this spring, but which I'm going to be bringing back. It will redefine the tax brackets and the ratios. I believe impose a surtax on pass-through income above $500,000. I'm thinking the governor already put that in her budget about but incomes above 500,000, but I might be wrong.
Comes over $1 million.
A million, okay. And also the expand earned income tax credit and make it refundable. I thought it was, but maybe I'm wrong.
yeah, I mean, I
Is it-
think the thing I would say about this page is there's some interesting tax policy ideas, but I didn't see the direct connection to property tax relief.
No, I will jump in. This one's a
Okay.
little challenging to put
Okay.
in a chart. This was a multi-page proposal that included wholesale structural tax change, as well as sort of redirecting some of those funds to property tax relief or to new programs that aren't currently in existence that would support costs that municipalities might currently shoulder. It's in, I believe we got this last interim. So it would be in that packet of public comment from the interim 2025 for you to more thoroughly review. And there are portions of that whole proposal that were pulled out and included in a couple of other places based off of how they fit into the broad categories. But so I just kind of note that that was there, but we erred on the side of including them so as not to exclude much public comment
Right.
when we narrowed the scope.
Right, so if they had said, and please increase the property tax fairness credit with some of these funds generated, then that would have appeared on their buff sheet.
Yeah, I think you might have seen something about like local climate resilience funds, for example, a tourism resilience
I
fee.
see,
Some of
yeah.
those were sort of connected to these just broad wholesale change package.
Senator Bickford?
Thank you. I'd like to hear more about the first item, split rate property taxes with one mill rate for land, one separate mill rate for buildings, and then the other two items were homestead versus non-homestead, and another one was split rate property taxes, municipal or statewide with very large homestead exemption. Can I get those three explained by whoever put them?
Sure. I
forward?
think so I can't do a thorough explanation. So the first three bullets and their sub-bullet of the first one are all about taxing different types of property at different rates.
Right.
And what properties you choose to tax at different rates, or sort of what are the different proposals here, especially in the sub-bullets. We did hear from the Lincoln, I think it was the Lincoln Institute for Land Policy, about taxing land at different rates than buildings as well. And so these are all kind of different proposals to do that. So I think the first question is there an interest in taxing different types of property at different rates, which we believe would require constitutional amendment? And then if you do, what properties are you distinguishing, or what would you like to distinguish?
Sure.
I would ask Dr. Allen to talk more specifically about the third sub-bullet about municipal or statewide with a large homestead exemption. Personally, I didn't totally understand that, so he's here to just maybe talk about what that one means. I think the others are slightly more self-explanatory. One is land versus buildings, homestead versus non-homestead, commercial versus residential.
Yeah, one that
You could have.
confused me a lot was the first one. One mill rate for land and a separate for building. Land is already valued differently than a homestead, so why would we even need a different mill rate? Because the value is already hugely different. I mean, I have 9.5 acres that's only worth $11,000, but then I have my homestead on 3/4 of an acre that is worth a lot more. So there's already a
Well, I think-
huge difference in what I pay for property taxes for each.
Right,
So-
but on your homestead property where you have a land, so I think most people, when they get their property tax bill, they see their value for their land and the value for their structures.
Yeah,
But those values are added together and the same mill rate is applied to that total.
right.
This is a proposal that would then say, for your land value, you might be taxed at 10% and your building's value might be taxed at 5 or 15, depending on what your outcome would be. And so on your homestead property, your tax bill would say, this is your land value times that amount. This is your building's value times that amount, and add those totals together. On your land only property, you'd only be taxed at the land rate, and not the
Right.
building rate. So I
Which-
think that's the
yeah,
proposal.
so now I'm taxed
they're
on my
valued
land
differently,
value.
but the mill rate is applied, the same mill rate is applied regardless of the type of property.
Right, okay.
Yeah.
I
So this would
just-
be proposing different mill rates depending on the. type
I'm
of
not sure I
property.
understand the reasoning that we would need to change it, that's all. Does Dr. Allen, you brought that forward, I think.
Dr. Allen.
So let me begin by saying, which I did in the email back to Opla, that these are ideas that we've accumulated over the years. Either they've come up from various governors to look at, or they're bills that have come before the legislature year after year after year. Or for a lot of these, I mean, again, the property tax difficulty that we're in, we are not alone. There's 49 other states that are going through the same thing. And so a lot of these are other ways states have either actually implemented to help solve the property tax issue in their state, or have thought about and decided not to do. The other issue, quite frankly, is we had the primary yesterday, but I watched the debates. A lot of the candidates for governor were talking about some of these proposals. It just seemed like we got a task force that's looking into this. If the next governor is going to be, and I'll be honest with, even more honest, I mean, I'm looking out for myself. I mean, I'm going to hopefully be working for the next governor. And if the next governor says, all right, I want to do this, I want to have the answers and say, all right, we looked at this and here are the pros, cons, here's issues that you have to do. So that's just a way of my saying that this isn't the administration's proposal or Maine Revenue Services or DAS, just a list of ideas. On the first bullet, this is a long, I believe Henry George was his name. This was his idea of taxing land at a higher rate than development. And the idea is to incentivize development.
That was my next question. Yeah.
Particularly like in urban areas, right? So you've got this piece of land, don't leave it abandoned, let's develop it. And there's an incentive to develop it by taxing the land and not necessarily the improvements that are being done on the land as much. And I'll be honest with you, I don't know if there are any states that have that, but the split rate property taxes on either homestead or non-homestead, commercial versus residential, there are a lot of states that have done this. And recently, Montana's the state that I'm aware of that has really gone at and looked at taxing second homes at a higher tax rate, taxing commercial property at a higher tax rate. And maybe there's a difference between land and buildings and personal property there. The famous one in New England is Rhode Island with the so-called Taylor Swift tax, which taxes second homes with a value above $1 million. But that sort of gets into the third bullet. The first two bullets are sort of, all right, municipalities, you're given the authority to do this. The third bullet is we have a statewide property tax, which Maine had at one point. And I think got rid of, and then I believe we brought it back in the early 70s or 80s for a period of time. And I think it was before it was implemented, it got repealed. Whether it was through a people's veto or the legislature just reversed itself, I wasn't here. But Mary Adams, I believe, is the person that sort of led the charge for that. But in Rhode Island, it's, as I understand the Rhode Island Taylor Swift tax, it's a statewide tax imposed by the state on second homes above $1 million. and that revenue is going to the state. I think they're using it for healthcare, DHHS sort of spending. But one possibility over the years that we've just sort of thought about is you could impose a statewide property tax, have a large homestead exemption to basically eliminate the impact of that tax on most Mainers on their principal residence. And that would get at second homes. It would apply to commercial property as well. And then that revenue would come to the state, and then the state could increase school funding. And, basically, obviously it's up to the legislature, but the thought being that that revenue could go towards helping alleviate the overall property tax for Maine residents through homestead, property tax fairness, credit, school funding, what jails, whatever the legislature thought was the best idea. But all of those are probably going to require some discussion about, do they require a constitutional change? We've had internal conversations at Maine Revenue Services, and it's always fun to listen to the lawyers sort of talk it through about, could the legislature have either just change the homestead exemption to $500,000 or have a statewide property tax that has a $500,000 homestead exemption? The lawyers tell me it's just not clear cut whether that's constitutional or not.
Mr. Leishman, you were next.
Thank you. Dr. Allen answered the question.
Oh,
I was
great.
Respond to.
I do think if members have interest in just understanding these more, or to me, it looks like if this is something that folks are interested in, that there are research questions that would come out of it, both the legal research questions, but also I'd personally be interested in if you were to apply a tax like this, a differentiated tax, split rate, similar to what another state has done, what does that actually look like for your median homeowner, in a town of a specific community? So I'm not saying that we're going to decide to go forward with that on the 30th, but it does seem to me like before I could be sure about anything like that, that's where digging into the numbers, I think personally would be like very illustrative because it's very theoretical. And I will note that the tax committee, we also received a lot of public comment on a day we had a big public hearing about property taxes about the land value tax. But I'm not clear on, and is that more of an academic exercise, or is there a state in this country that's doing it? And if so, what is happening there? Or is it happening in other countries more so? Mr. Hoskins.
I just wanted to make note that the land value tax, which also gets referred to as the split rate tax or split rate land value tax, is actually something that we work on very often. So I'm happy to sort of answer specific questions about it if any members of the task force have it. On your last point, this is something that has been done in several municipalities within the state of Pennsylvania. Actually implemented, and then in the sort of legislative sessions this year, we did see enabling legislation for split rate land value taxes in several states, specifically Kentucky and Virginia, the most recent ones. So yeah, I mean, I think it was covered pretty well in discussion, but the general idea of it is, if you tax income, people will work less. If you tax investment, people will invest less. The idea behind Betty, I think, is that if you give businesses tax exemptions on investment in capital, they will do more investment in that. And this land value tax just builds on that and says, taxing homes, taxing buildings discourages construction of those things. And so we want to exempt them from taxation and shift the tax burden onto land because it can't be moved away. If you tax land, you can't get less of it. So this is kind of why economists really like this tax.
Mr. Peters?
Yeah, there's also a virtuous cycle of municipalities investing in sewer resources or other things that then increase the value of the land. And so there's a direct kind of correlation between investment that a municipality could make to increase land value that raises taxes that allows for kind of continuous investment.
Interesting. Miss Billings, did you have your hand up, Penny? Okay, I'm gonna go right down the road here.
Yeah, just quickly, I do think that we've done a lot of really good work and, I've deeply appreciated it and learning new things. But I do think, looking into like what Vermont's done, a couple of these other ones, because, as we go forward and we put this report, people are gonna ask us, well, did you look into this? Did you look into that? To have a little bit of credibility, say, yeah, we did look at that. And I'm not saying we're gonna do it or not, but we did look into it, and these are the final suggestions that we've got. And I think somebody had said something earlier. What can you come out the gate with this low hanging fruit you can easily implement? What are things later on down the road that you could slowly kind of, look at to adopt?
Mr. Caliendo and then Mr. Woodbury.
Thank you. Well, what would be the most exciting is the development with this split tax. But I'm afraid I'll take us out of scope really quick, because if we encourage development on land, whether it's for commercial purposes or for housing purposes, the reality is you need to do both, right? We create jobs, but no one can afford to live there, which I heard testimonies of in city council meetings by developers. I can't get workers because they can't afford to live here. So whatever that is, so that's very worthy of looking at. And then you'll have the conundrum of our tourist areas that are highly concentrated, right? Barring how many cruise ships can come in. So what does that mean? And Bar Harbor, what I understand, because our trucks went there, I'm not a resident, so I can't speak as a resident that I was inundated with the foot traffic, which might be my opinion if I live there. But I think there just becomes an actual infrastructure overload, right? It's a 2-lane road down Main Street and you can't move. So they're just trying to limit the flow. But whatever that is, I think the worthy cause is that idea is to inspire both the whole economic growth engine, housing and commercial. Otherwise, everything else on here is I'll just say it, talking about raising more taxes when we don't understand expenditures, and people wanting to buy shiny new things if you give them something. What jumped out at me at looking at the handful of things when you're talking about capital improvements. So the dispatch phone system had to be upgraded, or we did have to replace a school bus. What I read similarly in the municipal reports, as well as the for-profit myopic experience, is nobody gets everything they want. And when you're talking about long-term improvements, updating your HVAC system, whatever it may be, people understand if they've got a 5-year plan, they're doing the best they can to manage those long-lived asset expenses in infrastructure. But the operating side that I tried to focus on when I got some detail was just the general operating expenses to understand where those things. So I have a negative viewpoint outside of everything else on this orange sheet, but we don't understand it. So other than this is a good idea, economic development is the only way to go. We're not building new homes in your community, so that the community is experiencing a higher burden to provide the services versus we expand the tax base. So we spread it out. Thank you.
Thank you. Mr. Woodbury and then Senator Bickford.
Thanks. I'm struggling with the land versus building tax, the split rate between land and buildings, in part because the explanation that we're hearing is that we want to tax land higher than once you build on it. And yet at the same time, we seem to have created tax advantages for things like tree growth and open space that are just the opposite, which sort of say when we keep them in that way, we want to tax them less because they're not being, used for something that's economically driven. And so I don't know, it's more, so I just don't know what to do with that juxtaposition.
Senator Bickford.
Thank you. Yeah, my viewpoint is very similar because there are a lot of municipalities that have their comprehensive plan, and their comprehensive plan says we don't want anybody to build in the ag zone. So what happens to that land? If you're gonna pay all these taxes on it, you can't build on it, and we want to encourage you to build. Well, who do you listen to? The state or the municipality? And Maine is, the most heavily forested in the United States. And what do we do to, back to your point about forest land and tree growth and open space and farmland?
Is some conflicting. Well, I thought it was interesting not
Yeah,
knowing a
it's a
lot
good
about it,
subject.
but hearing Mr. Hoskins say like, it's a tool that specific communities have been authorized to use. And if you're Bangor and you say, I mean, I don't know if Ms. Lear's still here, but wow, we've got a really big problem with vacant properties in our urban core where we want more housing and walkability. Like maybe they opt to use that tool because it's the right signal, but their rural areas elsewhere around Bangor think, no, we absolutely need the farmland. And so I don't know, I don't think it would be a great approach for the whole state, probably. It would maybe really change how sort of Maine, the way life should be feeling in some places if it was done to the extreme, but I am curious about it as a tool for urban areas, perhaps. Senator, thank you. Okay, anything else on the was this peach sheet? What color was this? Salmon, thank you. I was like, I forgot. I got buffed down, so that was an accomplishment. Okay.
So it sounds like maybe more, you're gonna put a pin in looking at split rate property taxes. You're not sure yet. You might want more. There's more than just the first, I guess, the more traditional one, land and building. You did have sort of the idea of taxing properties at different rates. Different types of properties at different rates. So leave it on the board for further consideration.
My thinking is yes, and I'll just say because of what Ms. Billings said around being able to say to folks, like, we did look at that and here's why we said no or yes. Because I feel like we've talked about it a little bit. So I'm not sure we know enough in my view, but I don't know. Representative Nutting. No, sorry. Mr. Leishman.
Thank you, Madam Chair. Stephen said they've done a lot of work with split rates. Maybe we could ask for a report about how effective they were or what the results of some of the places that have gone to a split rate have seen.
Yeah, I mean, we're not going to ask for it right this second, but it would be, that could be like a research opportunity, for the interim of the interim, which is July and August in my view. Unless, I mean, I don't know, it seems like there's interest to dip the toe in a little farther, but I'm not yet at a point of saying, this is the thing, we have to now prove it, just to be clear. Okay. Dr. Allen.
Again, it just seems to me that if this is likely going to be an issue that comes to the taxation committee, either through the next governor or through bills to the committee, it seems like a good time to sort of get ahead of it, at least look at it and educate ourselves so that.
Yeah, I thank you for that perspective, because I agree with that for the potentially being on the receiving end of
Yeah.
those bills and the whole committee saying, what is this and what should we do with it?
What did you do this summer?
Yeah, Mr. Caliendo, did you? No?
Maybe that has to be studied. And thank you for the reminding, Mr. Woodbury, with the forestry, with that whole other
Yeah.
land use, is that maybe you combine those topics together because there is an obvious conflict.
Yep.
Unless it's purely this municipality is allowed to do it.
Right. Okay, one more sheet. There's nothing, oh, okay, the school fund.
Can I just?
Go right ahead,
say
Representative
that
Nutting.
I don't like the yellow sheet. It's a morass that we'll find ourselves in. And it'll be community against community and let the education committee handle that on their own. That's my opinion.
Thank you. Any other opinions that differ from that on the yellow sheet? Okay. I appreciate the focus there.
The candor.
That was a case where I'm glad you did not defer. Okay. I think the comments, maybe what we'll do is decide to pass these along to our friends on the education committee. That could be our to do, because I do appreciate the comments, but I agree that the scope is challenging.
Outside.
All right. What's left on our agenda? Yes, Ms. Billings.
I guess I would just like to say one concern is they did came out with that article about the read-in, for the state, schools. And, that was pretty disappointing to hear how they're struggling. And if kids can't read and we're not really sure, like with schools, whether they're funded or not, what they're doing, curriculum or how they get into it, we're going to have future generations that are so disadvantaged because they can't get good educations. They're not going to have good paying jobs. And that's really going to drag down society in the end.
Dear Education Committee, why aren't you meeting this summer?
Yeah.
Maybe they will. Rachel, get me out of the hot seat. 'Cause I
Okay,
might say something I
you
shouldn't.
said what was left on the agenda? It was mostly housekeeping, I think. Oh, but I have their hands.
Well-
So I'm going to defer to the people online potentially. who have
Online
their hands
folks,
up.
sorry if we jump to the next thing without you. Mr. Lacy.
Thank you, Madam Chair. I just wanted to add if there was discussion about having Stephen and folks look at other states and those similar type of split rates. It would be helpful to know how many of those states have a similar constitutional amendment as Maine does, because I think is the potential fallback, if anything. So it'd be helpful to know if those same states that have done split rate taxation have similar constitutional issues. If that's something we want him to look at
And
as an opportunity, anyway.
I could perhaps give a quick version of the answer if you'd like it. So uniformity clauses are very common. I don't recall the exact number, but it's in the order of 40 states have them. In how much they prevent the use of split rate taxes is really just a question of how courts have interpreted their unique uniformity clause in each state. So it would require a lot of work to sort of get that solid answer on a state-by-state basis. What I will say is they are often fairly flexible in terms of courts have often granted their local communities and their sort of statewide governments quite a lot of leeway to implement exemption programs for certain types of property, which create a legal precedent for exempting buildings, which is essentially what a land value tax is.
Okay.
So in the same way that Maine has a uniformity clause, but Betty enables the exemption of taxes on business equipment, you could imagine a similar interpretation for certainly for exempting, buildings for the sake of a land value tax. I'm not sure how far that could be stretched to sort of categorical exemptions for, residential versus commercial. But that's the
But we're
kind of
not-
basis that
We're not well out of the norm, I guess.
That's right.
Okay.
Yeah.
Interesting. Thank you. Mr. Woodbury.
Thank you, Madam Chair. The school funding formula, everybody loves to hate. But I don't.
Subcommittee.
Yeah.
What's that?
You can be your own subcommittee.
There we go. The philosophy of it, aside from minimum receivers, is that the local community needs to raise what is now, I think, roughly 5.86 mils of local property tax to pay for schools, and the state makes up the difference. So it is very much like a 5.86 mil statewide property tax, but it has no homestead exemption. So it's a fascinating notion that we actually might be better off in getting the relief where we wanted to. I'm just thinking out loud, but it might be a better notion to actually make it a statewide property tax the way, Mike was describing the option here, but with a giant homestead exemption. And therefore we might, and it would be as if the state was paying for 100% of schools with this new thing that isn't really a new thing because we already have this 5.86 expectation. But with a lot more favorability toward homesteads. So it seems like something that maybe is interesting to think about.
Mr. Leishman.
And that might have a lot of great side benefits in that, like, people right now relocate to Florida because they've got a $50,000 homestead exemption and they take their income tax and everything else with them to Florida. So it might have a nice ripple effect.
Do we want to sort of add that on the list of things to potentially explore? Yes.
Yeah, it sounds like it's connected to
that third bullet.
exploring the split rate concept of at the, state, having a statewide.
Statewide with.
And then the question being, what would those dollars go towards? Could it go towards school funding to alleviate individual property taxpayers' tax bills? I mean, that doesn't have to be the answer to it. Like, you could do a split rate, establish a statewide property tax with the large homestead exemption and decide that those dollars should be used for something else. Those are the decisions of the legislature. But the recommendation might be to do that and then use those dollars for jail funding or school funding or both, or to alleviate property tax bills. We can put that on the list.
Okay, Mr. Leishman.
And even if it required a constitutional amendment, which is not easy, in the current climate, if we came up with something that would provide tax relief and it was sold that way, I would imagine that people are so fed up with property taxes that it might not be as difficult as we think.
Well, and as those who have served in the legislature know, and maybe others who too, if the legislature is really feeling like we don't want future legislatures to mess with stuff, then we put it in the Constitution. So there's a much higher bar. So not just the doing of it, but where would the money be spent? Things like that could be locked in a more with a higher hurdle, if you will, or higher burden. Just throwing that out there. Okay. Any further discussion before we wrap up with Rachel?
I'll just note, it was said at the beginning of the meeting, but the next planned meeting date for the task force is June 30th. And that will include a joint standing committee on taxation meeting with the task force. And that most likely means we will meet in a different room. We will send details for that meeting in the coming week and a half into your inboxes. So you'll have the specifics around timing and location. We will work on compiling the recommendations that were elevated today. So we will have a new working document for you all to use, and particularly as you would like to use it with the taxation committee and that joint meeting as well. To Mr. Hoskins' point, I think thinking about research questions that were related to the recommendations that you elevated today could be a useful practice for you between now and then. Some of your recommendations may not require assistance from Mr. Hoskins and the staff at PPI, but some may. So that is something for you to kind of consider. If you have questions, you can reach out to staff. We're happy to compile anything that you have as well to get it to the chairs. I think that's everything that I have to share at this point. So
great. Thank you all very much for a really in-depth conversation. A lot of topics we went through. Great discussion. I really, truly appreciate it and look forward to seeing everyone on the 30th. I will say as a caveat, I don't know that the legislature in recent times has ever done a joint meeting of a committee and a task force per se, or so this is, we're going to be figuring it out. And so, if things are a little different or awkward because we're sitting in two horseshoes and some people's backs are to other people or what have you, like, thank you for bearing with us in advance. Yeah, but they don't ever discuss things with the committees in that layout. Yeah, we'll see. Anyhow, thank you all. The 30th will be interesting and we appreciate your patience in advance if there's little hiccups. And with that, meeting adjourned.